Oh, snap. Here we goes. Hello, folks. Welcome back to another stock market live stream. Man, I am blown away, dude. House hack slash reinvest. I have to say that now, I feel like, because there's some confusion about us using a DBA that I want to avoid confusion, I should say. Not that I really think there is. I think people get it. But we $500,000, dude. That people invested in just the last like 40 hours. Really cool. And we're going to put this to great use. So it's really cool. And I love sharing the journey with all of you. You know, we're like, you know, we're not like a Mr. Beast gaming community. You know, I think everybody's here to make money. Everybody's here to you know, try to get ahead in life, right? And I think that's really exciting, and so I love sharing sort of, you know, what's working out there, and any kind of advice on really a daily basis. You know, it's actually one of the reasons we do the daily wealth. I thought yesterday we had a really good daily wealth, and if you don't get these yet, I encourage you to check it out. But like in the Meet Kevin app, you could see the daily wealth for yesterday, and like yesterday I talk about this life lesson from Leonardo da Vinci and Ben Franklin. And you could get that either if in the Meet Kevin app, or if you don't want the app, just go to meetkevin.com/data. And if you go to meetkevin.com/data, you'll see at the very bottom a place you could put your email, and then you could sign up. But and then you'll get the emailed version of the daily wealth. It doesn't matter to me. Like some of y'all like the app, some of y'all like email. Doesn't matter to me. However you want it, we'll send it to you. That said, you know, obviously we got the Fed tomorrow. That's going to be a big deal. A lot of people are going to be paying attention to the Fed. We've got a lot of you know, how should I put it? Enthusiasm around what Jay Powell is going to give us. I think what we might do is just build out some expectations for the Fed tomorrow. We could build that out together here. This morning we were in our course member live stream. Went a little long this morning because usually we do our technical analysis and we set up our day trades or sort of expectations for the day, like, hey, what direction do we think the market's going to go today? And you know, how do we play this or whatever, right? How do we play options? How do we do, you know, whatever it is we're talking about? And then we ended up doing two fundamental analyses. We did UPS and Wayfair, and oh my gosh, it just took way longer than I thought. But I just get so absorbed into these analyses, and I think they're really fun. But anyway, you know, Wayfair is obviously kicking butt today. You've got Netflix back up 1.3-ish% here. A little bit of a bounce. Watch this line right here, 1088, my friends, 1088 on Netflix. Very interesting line for Netflix. You've got, you know, Open Doors still picking up a little bit of Beyond Meat's lunch. Yeah, but you know, Beyond Meat's at $2. It's popping up 12% today, but I mean, look at the crash it had from $8, which is actually remarkable because we talked about this in the Alpha report. We're like, guys, $6-7, this is like a peak already for Beyond Meat. Be careful on this, and the sucker tanks. We did a fundamental analysis on it as well. We're like, there's nothing fundamental here. But anyway. So then you've got Wayfair, obviously, is up about 20% today. A lot of enthusiasm in this. It's been an enthusiastic stock since Liberation. I mean, look at this breakout Wayfair has had. Wayfair's 5x'd since Liberation. Absolutely insane. And it broke out of the rut that it had over here, this longer term sort of converging downtrend here, which is a pretty classic technical sign for a breakout, right? I mean, if we just draw a converging trend line here, let's see, something like, yeah, that's pretty decent. That's almost a 3-point hit right here, almost a 3-point hit. And then if I go draw, there you go. Something like this. It's not perfect. It's actually not bad because I can even take this back a little further. Look at that. That's not bad. So you could see this converging downtrend. Not uncommon on a technical basis to see a breakout like this. Is certainly out above this level here, or at least two, right? This top level here. And that's kind of what we just saw. I mean, this is super, super rudimentary and rough. It'd probably be better to put it like right there. Yeah, look at that. The peak right here, which is where that downward convergence starts, this little gray line that I made right here. I'll actually go ahead and make that like a green line. Here we go. Sort of basically aligns with the peak that you saw over here. Kind of wild, but it sort of gives you an example of how a downward converging trend can lead to this breakout. But now we're above that. Now it's like, man, wow, Wayfair. All right, we got it. Good for you, Wayfair. The Qs, a little slippy dippy today. Not a surprise. I anticipate more of this. Like, I'm not like bearish puts today, and that's exactly what I said in the Alpha report this morning. But I'm not here like YOLO calls on the Qs today because, come on, man, it's literally the day before the Fed day. What do you expect? Yeah, we don't do emails for course member live streams. We do emails for like the daily wealth. But the notifications, you do get notifications in a few different places. You can get, if you're a course member, you can get notifications via YouTube, via the Meet Kevin app, or via Discord for the Alpha report. Those are the three methods that we have. So, got a bunch of people saying 6-7. Oh no, did I say it? Oh no. Apple slightly red, Amazon slightly red. Talk about, are the layoffs going to start at 14,000 and go up to 30,000? Is it a 30,000 layoff? I don't know. We've got a nice push over here on Axon. This is a $100 move in just the last week. This is one of our faves in the Meet Kevin Alpha report. Remember that we're gonna expire the coupon code on that tomorrow, mostly because it's like the Schumer siesta just isn't ending anytime soon, and we haven't had a coupon all month expire. So like, what the hell? So we're like, no, we gotta raise the price. Anyway, Meta, look at this Meta slippage over here. I think this is probably pre-Fed slippage over here. Ethereum's trying to hold on to 4K. Bitcoin's got a nice move over 115, now sitting at about 116. Very cool. Trade Desk 53, trying to get a move on, huh? How about MP Material after Donald Trump's Asian meetings here? Okay. Little bit of a rebound after some of the pain that we've had the last few days, which is not surprising either, that we sort of had the psychological cap out at 100 and then now we're sitting on a retracement line. Not a biggie. Okay, good. So let's look at some scenarios here for the Federal Reserve, and we're gonna map this out. Okay. Good morning, Willie. How you doing? Somebody else, Walk America, says, is crypto still a thing? Nope, it's dead. No, it's fine. For now, everything's fine when there's no recession. But let's go map out the Fed. Sonny says none of YouTube notifications were sent. YouTube is also sending emails. Well, remember, you have to know this. This is exactly why we made the Meet Kevin app. YouTube will only send you 3 notifications in a 24-hour period. So it doesn't matter if you have all notifications checked. Like, people look at the videos and they're like, Kevin, I checked the little button that says I want all notifications, the little bell, right? And then I'm like, doesn't matter. YouTube has a rule that they will send you no more than 3 notifications in 24 hours. So if you are so inclined to actually want more than 3 notifications from Meet Kevin, then I implore you to download the Meet Kevin app. And then you can even go to the little preferences pane, the hamburger menu up here. What? Because I'm why is it doing that? Hold on a sec. I think it's because I'm plugged in. Yeah, that's funny. Anyway, you go to the little hamburger menu and you customize your preferences. Can't even open it right now. I think it's because my iPad's plugged into the HDMI. That's a little unique edge case bug there. Anyway, you open the preferences pane. Oh, there we go. Okay, now it's working. You open the preferences pane and, it might be because of where I have my, I honestly have no idea. Is it the iPad or what's going on with it? Huh. Anyway, ordinarily you open the preferences pane and then you can customize the notifications, which I've never had that error before. But yeah, it just keeps wanting to go down and disappear, so I'll have to look into that and see what the problem with that is. That's a funny one. But anyway, then you customize the notifications. So, okay, good. Let's now talk Fed. So somebody says, damn YouTube. I know, it's crazy. Somebody here says, please change the logo behind. Doesn't reflect your quality. It's too garnish. What the hell is garnish? Oh, gamish. Oh, I just can't read. Too gamish? Bro. Hold on. There. How's that? Is that better? Is that better for you? All right. Now what we're going to do is we're going to talk Federal Reserve. All right. So let's see what we have here. That is ready to go. That is cooking. Now we're going to talk Fed. Fed scenarios. Who's ready for the Fed scenarios? Well, I'm not, because I need to pull up the Fed forecast right now. Okay. So, let's see here. Fed. All right. Okay, so yeah, okay, we got the rate cut expectations. All right, so that's fine. All right, let's bang this out with the Bowser Cup. Jay Powell is going to rug us tomorrow, or not. Well, that's what we're going to talk about in today's segment on the Federal Reserve. It's Schumer Siesta coupon code expiration eve. That's right. The Schumer Siesta coupon code finally expires tomorrow for the Me Kevin Alpha report. But for right now, we're going to talk scenarios, and we're going to build them out together. So Federal Reserve scenarios. Here's the game plan, okay? So what is expected? What is expected? We always want to start with this like the base case. This is what the market expects, okay? So the market expectation, we'll go green check mark here. We are expecting with a 96.7% probability that we will get a negative 25 BP cut, and we are widely expecting the vacuum cleaner to pause, okay? Why do we expect the vacuum cleaner to pause, and what the heck is that? That's basically the end of QT. This is the end of an era. QT began in March of 2022. It has been 3.5 years of quantitative tightening, and the end of QT, which is the Federal Reserve selling bonds. Mind you, when they're selling bonds, they're lowering the value of bonds, right? So this has the impact of lowers value of bonds when they sell bonds, right? Because there's more supply. When they stop doing that, they could potentially lead market rates to actually come down because they're selling fewer bonds. We don't have to think about the mechanics of that. Just think bottom line, Fed rate down, and hopefully market rates down. However, usually the market already prices that in. And so we're probably around 4% on the 10-year treasury as just a stable, here's where we sit. If we get a base case from the Fed tomorrow, nothing freaky, nothing scary, what do we get? Probably honestly still sitting around 4%. If we get the end to QT, because QT isn't entirely priced, I would argue maybe 70% priced in for QT. Maybe we end up getting like a 3.9, maybe on the 10. Do we expect some kind of big cratering on the 10-year? Probably not. Broadly, this is the base case. This is what's expected. And if we get this expectation, it should be modestly bullish. So I'd call it modestly bullish. It's nothing scary. It's not scary. It's nothing that makes us really concerned. Now, what should be concerning to you? Concerning to you, not markets, okay? Because you know that markets can be irrational. We can make a lot of money in markets. We can, markets can skyrocket, but we can also know that there are bottom line issues in the markets, right? The most concerning thing that you want to pay attention to tomorrow is twofold. So number one, you want to pay attention to any talk about private credit being, how should I call it, systematic, or a systematic risk. So this would be system-wide rather than just idiosyncratic. That's going to be your big oopsie doopsie. You don't want to hear any of that. I don't expect you're going to see Powell say anything negative about this. So I would say expect Powell to sweep this under the rug, right? Keep the cockroaches where they belong, so to speak. Now, previously, we've had him talk about the normalization of the beverage curve may be beginning. Okay, this is complicated. But we talked about this a little bit this morning in the Alpha Report. Mind you, we do that every morning before the market opens up. Not only do you get sort of my next 10 stocks to buy for the next 10 years, but sort of my take on, where's the market going to go in the day? Like, is this the day you go call options, or, do we sit out Fed jitters and kind of just wait and see? Those are the things that I kind of plan for in the day. But in the morning report, what we touched on, so the first time I've talked about it, is the steepness of the beverage curve. Now, the steepness of this, it's a little complicated. I'm going to keep it nice and short. But basically, if Powell talks about the steepness, that's all I want you to think. If he talks steepness, I want you to think bullish, okay? If Powell talks steepness, think bullish. Basically, steep, if he references the steepness of the curve, it's just a fancy way of saying new normal for the labor market, right? If he downplays steepness and says curve should normalize, that's bad, right? Because it means that unemployment recession might be getting closer. Now, obviously, we've been worried about the unemployment market in the labor market for about a year now. We weren't worried about the labor market in 2022. We had a crap load of layoffs in 2022, but remember what happened in 2022? The jobs market was so freaking tight, you couldn't hire anyone. You couldn't find anyone in 2022. So when Amazon fired 28,000 people in 2022, guess what all the people did who got fired? They went and got a better job. They went and got more money somewhere else. So like totally different jobs market. Today, we're firing 14,000 or up to 30,000, which is just a way for them to sort of like tamp down headlines a little bit. Now they're going to fire up to 30,000 people. That's more firing than what we saw in 2022, and it's a horrible time to get fired, mind you. Like, I was talking to Jack yesterday. I'm like, bro, imagine you're an accountant and you got fired along with 30,000 people, and now you got to go find an accounting job. This sucks, especially in the days of AI. And he's like, Dad, this sounds terrible, but what's an accountant? And I'm like, okay, son, have you ever heard of a credit card? And then I start teaching him about debits and credits, and he's like, Dad, I'm 10. Anyway, so we were actually doing that yesterday, though. This is what happens at midnight at the Meet Kevin household. You start talking about accounting. But anyway, hey, you know what? Put him right to sleep. It worked out great. So anyway, the thing to think about is, like, now it's a lot tougher of a labor market if you get fired. And so it's not just 30,000 at Amazon. It's not just the 1,000 at Target or 1,500 at Target or the 1,000 at Paramount, but also UPS. UPS is bragging about how they laid off like 35,000 workers in the last 9 months. Okay, 35 over the last 9 months. That's like 3.8 thousand workers every single month. Gone. Afuera, afuera, afuera. Thousands of livelihoods, man. It's scary. And it's like, if it were a 2022 market, fine. Like, just go get another job, you'll be okay. But it's not, man. I mean, you've literally got Walmart bragging about how they want to keep their jobs, their hiring flat, basically. for the next 3 years. So Walmart wants to grow revenues and not hire for the next 3 years. That's scary. Goldman Sachs says, yeah, we don't want to hire at all for the next, whatever years it is. And then on top of that, you've got, I think they said 1 or 2 years at Goldman Sachs. You've got other companies also reporting that, yeah, no, we're just not going to hire right now. So that's why I say when it comes to the Federal Reserve, if he downplays steepness of the curve, it's good. If he says the curve should normalize, it's bad. Because the curve normalizing with how low vacancies are right now, bottom line, means the unemployment rate's gonna skyrocket. If he's like, well, the curve's just steeper today, this is a new normal, it's potentially a sign the Fed's just gonna be slow and too late. They're kind of doing the usual everything's fine, the economy's fine, things are bullish, it's just a new normal. It probably means they're gonna be too late, but it creates no shock now, and that's in contrast to what they could do in another scenario, which let's talk about the other scenarios. So in another scenario, the Federal Reserve could also come out hawkish. The most hawkish thing that I think we would get tomorrow would be 25 bips, because that's basically priced in. I don't think they're going to shock us. I don't think we're not going to get zero. We're not going to get a hike. It's just they're not going to go for a rug pull on the market. You've got too much funding stress. So too much funding stress to see zero or a hike. It's just not going to happen. I would put this at 1% chance. Okay, especially with that last CPI report we got, 1% chance. So hawkish would be 25 BP and no QT end. I don't really see this happening, but this would, in my opinion, yields up and stocks down. I put this at a 10% chance of happening. We're probably going to be over here at this sort of base case scenario is probably closer to 70%. Honestly, probably closer to I'll go, let's see, 10. Yeah, I'll go 75%. What there's actually more of a chance of, and I would put this at a 15% chance, is actually the bearish. So the bearish 50. This is not mega likely, but it's possible. The bearish 50. So the bearish 50, this would be a bearish shock. I think there's a 15% chance of this, so I think it's unlikely. But this would basically be SH9T, what does the Fed see that they need to rush to get ahead of, right? That's how the market's gonna react to this. And that would also be, a sell down, because even though it comes across as bullish, oh, wow, that's great, cool, we got 50 of cuts, it would be somewhat shocking. I had a course member ask me this morning ago, they're like, hey, Kevin, congratulations, you guys, you raised almost, I think we're at $500,000 now raised for House Hack in just the last 40 hours, which is crazy. I think that's in part because, and I know people, they I wear the Reinvest shirt, so I always like to be clear, the Reinvest is the new doing business as for House Hack. So we put a little note on the website for that as well. But I think people are looking, they're like, wow, you guys are going to have this Wedge AI, and you've got your AI timeframes on your website, and that you could go see it if you want at reinvest.co. This video is not a solicitation. Read the offering circular, right? But anyway, our renovation AI, we've got some really cool things coming. We're really excited. Every day, I'm just I'm giddy about this, and I'm working with the AI team. We should do this, we should do this, and they got to keep me reined in because there's so many things that I want to do. And we're going to look at a Nick T article here in just a moment as well. But they're like, hey, Kevin, what is, what is the potential of us ending the funding round sooner and Reinvest? And I go, look, I'm the no pressure guy, okay? I was the branded Meet Kevin no pressure agent. And I never want anybody ever to feel pressure to invest. And it's very important to know that there's never pressure to invest. I really don't think the Fed's going to go double cut tomorrow. Obviously, if the Fed comes out and they do something crazy oh, we're going to cut 100 basis points because we're panicking, obviously, it's going to make sense to talk to the board and no longer do a 5%, yield on our round, where you get 100% of the upside of the stock plus a 5% yield, obviously, right? Because like if rates tank, like why would we do that? You don't have to compete with that. Like I think 5% already is pretty good when money markets are yielding you like 3.75, and that's like you're getting 5% plus the upside in the stock, which I think is valued at a real estate valuation. And has no valuation premium for AI. You know what I saw yesterday? And we're gonna look at this article here, but I saw this yesterday, and I like, part of me like wanted to vomit, but the other part of me is like, this is great. But listen to this. Look at this. You can't make this up. Sequoia Capital leads $750 million round for a startup that, quote, uses AI to create slide decks. It's right here in green. It uses AI to create slide decks. Bro, Grok and GPT already do that. How do you possibly get a $750 million startup for basically a GPT wrapper? Like, this is bullshit AI. So in my opinion, there are two AIs. There's like, first of all, you got your generative AIs that are actually good, like whether it's Grok or it's GPT or whatever, right? Like, Claude, Anthropic, whatever. Like, they're good. They're all, have their strengths and similarities, but they're good. And then there are all the startups that basically just ride on the coattails of those companies. And then I'm like, oh, you guys aren't even doing anything unique. What's proprietary about this? And then almost $1 billion valuation is like, this is stupid. Whatever. Like, we have proprietary MLs at HouseHack, and we keep training more. We're like, all right, now we need an ML for this. I don't want to get too detailed into the MLs we have, because there's some of our proprietary edge in how we structure our real estate data. But it's really fun, and I study AI on a daily basis. I love it. I got my AI book right here. But one of them at least. So what's really interesting about this whole Fed thing is I don't think we're going to get, that's going back to the Fed here, I don't think we're going to get some kind of crazy 50 BP or shock cut, right? So here's Nick T's article. And Nick T's take here is that the Federal Reserve officials have a suddenly pressing decision when they meet this week that has nothing to do with the interest rate cut. It is whether to stop shrinking the portfolio at this meeting or wait until the end of the year, right? So that, unfortunately, is a risk tomorrow that we end up getting, let's go back to this. There is a chance, within this, so 30% chance, no QT end. Within that 75% base case where we get the 25, there's a 30% chance we don't end up ending QT, right? Not ending QT, not great for bonds. People are looking forward to this, maybe a little bearish, but it's mostly bullish. It's going to come down to the wording. I don't even really think markets are going to care about the normalization of the average curve versus a steeper curve here. Again, remember, if you hear steepness, think bullish, because it just means him saying new normal. It's bullish for now. It could also just be blind to history, right? And if you hear normalization, it's bad because of the layoffs, fine. But going back to the Nick T piece here, what do we have here? As recently as 2 weeks ago, the Fed seemed on track for a year-end decision. However, Powell, in a rare speech devoted primarily to technical monetary plumbing dynamics, said the central bank could approach the point in the coming months where it needed to end QT. And that's really because of that pressure that we're seeing in SOFR, which is the secured overnight funding rate. And so the debate is going to be separate from what we're seeing regarding interest rates. Here are the Federal Reserve assets. You can actually see they're basically back to COVID levels, like right before COVID. Well, actually, no, that's not true, because technically the COVID printing started over here. They're just right after COVID. We just kept printing for a very long time. This is probably where the inflation came from. Like, this was the emergency response, and this was probably just the continuous printing that led to all the inflation right here. That's where they overdid it. So the overdid it portion is gone, but the COVID response is still built in the system. That'll probably just stay there forever. But the Federal Reserve doesn't want the balance sheet so big because supplying trillions of dollars of interest-bearing reserves to the bank carries political costs, such as paying larger amounts of interest. But they want to keep short-term rates under control, blah, blah, blah. None of this really matters It's just basically as a way of saying, as we saw yesterday, we've started to see some volatility in the spreads on the overnight yields. Now, I always kind of like looking just to see what some of the comments are over here. So let's just go to like most liked over here. When the Fed purchases securities, it creates reserves, electronic cash that the bank holds. This is basically, yeah, printing money to us normal folks, creating value out of thin air. So technically, and I always get a comment out of this every time I say this, it's correct and it's not correct. The Fed doesn't actually print money, the Treasury prints money, but the Federal Reserve changes a number on a spreadsheet that creates essentially debt for the government out of thin air, and the Federal Reserve, and then they print the money, right? So I always think that's very funny. Decentralize. First, the economic sophistry of modern monetary theory must be revealed. You know how many people I feel like just write comments now with AI? It's just like, I wonder how much of the internet is just dead these days. Like, who actually writes their own comments anymore? I know you folks do, but you folks are smart. Somebody says, please bring back the soundboard.
Just close the fucking door. Close the door.
So, anyway, look, that's the preview. Now, what do we actually think that's going to do for markets? Okay, look, I'm going to be clear about this. This morning in the Alpha Report, this is a free sample, okay? This morning in the Alpha Report, I said, folks, today is not a day for puts. Today is probably not a day for calls either, though. I think the Qs sit 6:30 as a floor and hang out. And it's really freaking scary because it's on the dot at 6:30 right now. And I said this in the pre-market. You can fact check this. You go back and watch all my live streams going back to like 2018 or there. And you go back into the live stream this morning, it's like, yeah, Kevin wasn't mega bullish today, but he also said no puts. I literally said, there are some days, if you're trading the Qs, there are some days you just take off. And today might be one of those days. Now, why would I say that? Because isn't that boring? No, I actually think, obviously I can't give you personalized advice, but I think it's really good perspective. Why do I think it's good perspective? Because you go to the Fed meeting, bro. This is so normal, like right before Fed meeting and then China on Thursday. Come on, man. Of course the market's going to be like, all right, sure, all-time highs. Maybe I'm just going to kind of chill out and wait just a little bit. Come on. Hey, if you're happy with your own strategies, or your own fundamental analysis, if you're even doing fundamental analysis, great. If you want to see the fundamental analysis that we're doing and the technical analysis every day before the market opens up, almost every day. Sometimes I get sick. I actually take a sick day. I call on my boss, but that happens very, very, very rarely, a handful of times a year. And I still try to get the Alpha Report out, even if I can't go live. But come join us over there in the Alpha Report. Use that coupon code Schumer Siesta. We're going to expire that tomorrow evening. And then the price will go up. So we'd love to see you there. Let me see what some of you have in the chat here this morning. Somebody writes, Kevin, my strategy is called Taco. Yeah, that's why I sit at like an 8.9 to 9 out of 10 on the Taco scale. Totally agree, man. The Taco scale is something else. Okay, let's see here. Then we've got bring back the soundboard. We got the soundboard for you.
Nice to have you. You want to talk about lovemaking, right?
How many of your kids did you have to lay off due to AI? I'm actually hiring. All of them are hired. They're great. We call them the Magnificent Seven. The Magnificent Seven children. Sometimes we put a little more money into one of the Mag 7s and a little more into the other, but we always try to balance out our allocation to the Mag 7. All right, there's my take on the Fed. All right, good. So, all right, next up. Today. Yeah, who says that? Who starts out their speeches? Let's see if anybody, you stand outside, probably got to take off the hat. You stand outside, you're out in a grassy plain. Today. Is that enough to get anybody to recognize? I have no idea. All right, somebody else here says, Kevin, Okay, ABC, I've answered this question multiple times now. I'm going to answer it one last time. YouTube only sends 3 notifications in 24 hours. Even if you have pressed give me all notifications. So you have 2 choices. You can manually go look on YouTube, or you could get whatever you want through the Meet Kevin app. But again, there's nothing that can be done about that. That's just YouTube's rule. 3 notifications max. That's the whole reason we made the Meet Kevin app. So very useful. So well, I don't do a bull bear scale on interest rate plays, but oh, somebody got it. Rexy got it. Rexy nailed it. Tim Cook. Wow. Let's go. That was it. That's pretty impressive. That was good. Like I said one word and you nailed it. Today. So that's pretty good. All right. Cool. Now let me, I gotta turn this light off. Otherwise the battery's gonna die. It's the only downside about the Warglaves. The batteries. All right. So let's go see what other news we have. Especially I want to see like if there's any more AI news. I love looking at the AI news daily. I always find it very entertaining. Okay, so give me like 10 seconds here to get situated. And Kevin, is the minimum? No, the minimum investment on House Hack / reinvest is 20K. Because remember, it pays a 5% yield, and somebody's got to set that up. Like we gotta sit in the office and put that work together. Like it's like there's effort involved. So we gotta account for it. It's just we don't have the staff to do a smaller number. Oh yeah, we're officially over $500,000 then in the last 40 hours. That's cool. All right. Cool. All right, so let's see what's going on here with the queues. We've got what appears to be a little bit of a slow bleedy on the queues here. Let's see here. Okay. Then we've got, let's go ahead. I want to see the Kathy interview. We'll go ahead and look at the Kathy interview and see what we've got over here. That should be fun. So the Kathy interview was on AI. We're gonna pop this up here and see what she's got cooking for us. What stew is Kathy Wood got for us? Red cowboy hat to match the shorts. Hell yeah. Nobody knows red better. Next thing we know, we're gonna dye our hair red. No, we're not gonna do that. All right. So, Kathy. All right. Let's listen in. Kathy Wood on the AI bubble.
Meantime, let's talk about some big investments in tech as Kathy Wood's ARK ETFs made significant changes to their portfolios last week. According to daily trading disclosures, selling AMD and Shopify and buying Baidu. The China interest is part of a trend this year, with Wood buying Alibaba stock for the first time in 4 years last month. In fact, I was just looking at some of the performance in AMD, and you can see that stock up more than 100%. Is the rally done, or is it just beginning as a challenger to NVIDIA? Let's get out to Dan. He joins us live from Riyadh. Dan, we're meant to be talking about investments in... Yeah,
it is interesting because you did just see like a rocket on AMD. The 232 line was quite bullish for AMD. All right, let's get to the start. Where is Kathy? All right, let's get to the first question here.
AMD. Your thesis is innovation. Do you welcome that pop? Is it just getting started? Where is it going from here?
Yes, I know a lot of people are worried about all the AI hype, but as we're looking to the future, especially with embodied AI, which is all about robotaxis and transforming the world of transportation completely, and then healthcare, which is probably one of the most profound applications of AI. We think that this investment will pay off. And I think the chaser is going to be humanoid robots. And I think
Humanoid robots as the chaser. So we're going to have a party, and then we're going to chase it with a sweet, sweet Kathy drink of humanoid robots.
Is going to be the biggest of all the embodied AI opportunities.
Well, Kathy, the concern in the
I asked Jack yesterday, my 10-year-old, hey, how many years until we get humanoid robots? He said 50. And they're like, what? So then I showed him the Optimus doing Kung Fu, and he's like, so? And I'm like, does that change your thesis? It's like, no, 50. I'm like, oh, okay.
market right now
Bear, show me your shorts.
is that the pace of innovation doesn't necessarily justify the premiums that we're seeing for some of these names. How would you respond to that?
Yes, well, if we're right and the growth continues to accelerate in this space, we think that the growth that the valuations will make sense longer term. So you really do have to have a.
That's always a scary thing. Is like, the valuations suck right now, but it'll all make sense in the long term. Trust us, bro.
Longer term time horizon, which we do. We have a 5-year investment.
And just extend the time horizon 5 years. And if we're wrong about those 5 years, like, from maybe 2020 to 2025, just give us another 5.
Investment time horizon. I'm not saying there will never be any corrections. Of course there will, as many people worry, okay, is this too much too soon? But if our expectations for AI, especially embodied AI in the way that I just described, are correct, we are at the very beginning of, a technology revolution.
Is AI in a bubble right now?
I do not believe AI is in a bubble. What I do think is on the enterprise side, it is going to take a while for large corporations to prepare themselves to transform. It's going to take a company like Palantir going into the largest enterprises and really restructuring them in order to really capitalize on the productivity gains.
Yeah, I mean, this is something that's been talked about a lot, this idea that, well, are companies even AI ready? Like, how much of their data is actually ready to be, interpreted? Because a lot of the data that companies have is just so unorganized. You actually have to sit there and clean it all up first before you can actually start gleaning insights from it. There's this famous line in accounting. I mean, it's famous in basically anything, but it's garbage in, garbage out. And if you have poorly structured data, you're going to get poor AI results. Because remember, AI is all about various forms of pattern recognition. People get mad when I say this, but the reality is when you study AI, you see it's all pattern recognition, to where even generative AI is essentially pattern recognition based on what you've seen on and studied on world models or images previously. What do you think a tiger sitting on Mars would look like, right? And we utilize previous patterns to come up with an expectation for, well, it would probably look like this. I mean, in your head, you could say, well, I've seen pictures of tigers and I've seen pictures of Mars, so I'll just put a tiger on Mars. You're utilizing previous pattern recognition to apply that to a generative idea. It's the same thing with artificial intelligence. The problem is, if your core data sucks, then you ain't gonna do anything with Palantir. And so she's right. There's gonna be a latency with how long it takes a lot of these large corporations to actually implement AI. And I think that's where, that's where the layoffs are coming from. People are saying things like, I saw some folks in the comments yesterday, not many, but there were a few comments in the comments yesterday where people were saying, Kevin, you're talking about these layoffs at Amazon, but they like AI doesn't just lay off people. You're right. Like, you can't 100% replace something that somebody's doing with artificial intelligence. But what you could do is you could take another human and load them up with all of the work of maybe one or two other humans. So you have one human with AI that does the work of 3 humans previously. So you still have human in the loop, but you just need fewer of them. That's why we're getting these up to 30,000 layoffs at Amazon. That's why Target's laying off headcount from the corporate staff. That's why Walmart won't hire for the next 3 years. This is all bad for the labor market in the short term. In the long term, we will generate new jobs. Like there are also some people who are like, I don't want to have kids because, robots are going to take over the world. What are my kids going to do? Like, no. Don't have those fears. Like, long term, you got to be optimistic on technological revolution. So I agree with Cathie Wood there. But yeah, short term, some of these valuations are a little cooped up.
That we think are going to be unleashed by AI. In the consumer space, the consumer loves all of this, and I think we're all looking forward to our personal assistants doing our shopping for us. Well, I am. As I talk to people around the world, some people love shopping. So then we
that. It's called Dior Dachet, the international delivery conglomerate. Dior Dachet.
But I am really excited about not just shopping, but how much my productivity as an individual is going to increase with AI. It already has in terms of research.
Let's just stress test this point.
In terms of research, that always scares me when people start, like if you use AI only to research, your knowledge will be so baseline. Because if everybody uses AI, then everybody's got the same knowledge. You have no alpha. No alpha. Like sometimes I feel like I'll purposefully leave spelling errors in like my daily wealth or my alpha reports because I want you to know there's no AI going into it, because that's the baseline, right? Like there's no alpha then if it's baseline. Somebody here in the chat says, Gustav writes, exactly, I work in a large pharmaceutical company and has been working on data collection. It is all Excel sheets and talking to people who have been there for 20 years. Right. I mean, it's like, this is a heavy lift to get all this stuff AI ready, right?
Because you said that AI is not in a bubble, but you also flagged that there could be a correction risk. What's the timeline on that correction then, if you were to gaze into your crystal ball?
I think we're going to reach a moment in the next year where the conversation will shift from lower interest rates to rising rates, but it will be for a good reason. We think that the economy, the U.S. and the rest of the world, of course, will participate, is going to move into a productivity-driven boom just in time for our midterm elections. So I think when interest rates reverse, there will be a shudder, because there are a lot of people out there, and we saw this during COVID and its aftermath, who think that innovation and interest rates are inversely correlated. That is not true over history. Even in 2017, when interest rates went up, we had phenomenal performance. So I want to disabuse people of that notion, but nonetheless, the way algorithms work these days, we think that there will be a reality check, shall we say.
A reality check.
Part of me wonders if, to some extent, she feels like she has to hedge that, like, oh, there'll be a reality check, like prices are going to come down, there'll be a correction because of what happened in like 22. And in fairness, she said, hey, like it might make sense in 2021. I remember her saying, you might make sense to have a little bit of money, on the side, like a little cash. I remember her saying that. And it's very interesting because it's easy to forget when the market's running at all-time highs. So like, yeah, it is a good idea to keep some cash on the side. But it is interesting. Like, I'm not sure to actually think of this as a bellwether or think of this as just sort of Cathie Woodian hedging that, oh, there's going to be a reality check and there's going to be a correction or whatever. I don't know yet. Maybe she has a thesis for it.
Okay, so if we do come into this higher rate environment, as you're suggesting, then how should investors be thinking about allocating in the innovation space? Of course, we look at ARK up more than 50% YTD. Talk to me about some of the allocations you're making right now and this big bet on the future. Ultimately, what's going to pay off?
Well, one of the things we have focused on consistently is, really, this is going to sound It's going to sound almost silly, but we're focused on the future and pure plays in the innovation space around robotics, energy storage, AI, blockchain technology, and especially multi-omic sequencing in the healthcare space. I think that's the most underestimated and underappreciated. So those are our 5 main areas. They involve 15 technologies, and we think they're converging to create really explosive growth opportunities.
What do you
We have heard that same exact line for 5 years. And I'm not saying she's wrong. I just think 5 years has already shown us it's the wrong time horizon. It's probably like 20 years. I hate to say it. And I'm a big fan of genomic research, but I've also seen these genomic testing companies go bankrupt because there's just not money in it. And it's sad because there's some really great companies that were doing great work that just go bankrupt.
you think has changed in the market that is rewarding your strategy again? Because I also think it's fair to say, since our last conversation in Abu Dhabi a couple of years ago, you've been through a pretty rough patch, right?
Yes, we went through a very rough patch. And in fact, during
I was just thinking of the name. It was Invitae. We actually, when we were doing fertility work, we had some Invitae tests, and that was something that I know Kathy was very excited about. I was excited about the company as well. I never invested in the company, but the company ended up going bankrupt. 23andMe was another sort of data play around genomics, right? And NASDAQ actually interviewed me on the 23andMe SPAC. And I said, like, I'm bearish. This is an insane, like, cooked up valuation. And what's crazy is that was October of 2021. That's not my article, because that's like, of course, that was a Motley Fool article. Oh, it could be a great deal. No. Oh, here it is, 2021. With Meet Kevin, analyzing the deal with Meet Kevin. Blah blah blah. Meet Kevin is a little amusing. Oh, thank you. Yeah, basically, if you actually go through this, points out that, the valuation is a little cooped up. So kind of cool. But, these genomic companies, that's the risk, is if it's a 20-year play instead of a 5-year play, they run out of money.
during the 4 years prior to this administration, we were facing increasing regulation, a massive increase in interest rates, supply chain shocks, all of which impacted unit growth. And unit growth really drives innovation. And the faster units grow, the faster costs decline. And so we're through that. And more important, in this administration, we have with OB3, the One Big Beautiful Bill, massive tax changes that are going to take the effective corporate tax rate in the United States down to what we believe is 10%. Statutory will still be 21%, but with the
Okay, now that's a crazy idea. And maybe she's right, but for corporate taxes to go down to 10%, you'd really have to imply that companies are blowing money on R&D to pick up those R&D tax credits. Because, I mean, like, not only R&D tax credits, but like, I suppose 100% expensing or accelerated expensing on investments, but that's short term because you can't spend forever and 100% write off every single year on your equipment or accelerate depreciation. Like eventually that catches up. So maybe a short-term stimmy there, but I don't see a long-term corp tax rate that low.
accelerated depreciation, massive accelerated depreciation in manufacturing structures.
Yeah, again, that works up front. It's kind of like think about this, okay? You buy a plane, okay? Let's say you're JP Morgan, okay? And you bring back 100% bonus depreciation for Gulfstream jets. So you buy 10 of them, okay? You know how much of a tax saving that is if you buy 10 slightly used Gulfstream jets? That's gonna be $500 million that you just get to write off. Poof. No income taxes on $500 million. And then you're a bank, so what are you gonna do? You're gonna finance those Gulfstream jets, right? So like, look at JP Morgan, for example. So you go to JP Morgan, let's go see here. JP Morgan, we've got net income. Net income is they've got a lot of money that they make. Look at this. Net income, That's cash from. Let's go to the income statement. So for actual income, net income after taxes, 14 bill. So they have to buy a few more planes. But the point is, they could easily then pay no taxes on $500 million of aircraft just by buying 10 that they could finance, with 20% down, which is kind of wild. So the tax benefits are wild. But then the question is, do you need to buy those 10 aircraft every single year? It's great 1 year, but are you going to do that again next year? Probably not. It works now while we're building out data centers, but it doesn't go on forever. That's more my point with that. So the actual realized, tax benefits might be great for the short term, but I don't think so for the very long term, like she's describing here.
Equipment, domestic R&D, and software. We think that that is going to turbocharge innovation in a way that people do not appreciate right now. And that is one of the reasons we do believe we're moving into next year. We'll see this idea of a productivity-led boom in activity.
Not to get political here, but do you think the Trump administration deserves some credit for that as well?
Yes, I do. I absolutely do. They're very focused on deregulation, massive deregulation. We have a crypto and AI czar. Never have had that before. And they are focused on business-friendly policies, inviting more foreign direct investment into the United States, especially in the manufacturing realm. So the depreciation acceleration applies to manufacturing structures. This has never happened before. For the next 3 years, if a manufacturing structure is underway, its first year in service, during its first year in service, a company will be able to depreciate it 100% in year one, as opposed to over 30 to 40 years. That's a massive tax cut.
Yeah, it's not untrue. She's right. These are big tax cuts. Great for the short term. So it's sort of like, I think the way to look at the Trump administration is as corporate stimulus. It is a corporate stimulus president, which is very much the opposite of what we had during COVID. And that's not to be anti-Biden, because Donald Trump also instituted the first, CARES Act. He was president when the first bill came out of stimulus. So what's fascinating about that is you really think that, yes, Kathy's right, corporations are going to win more on net with tax benefits for the short term, the next 3-5 years. I agree with that. But I also think that corporations look and recognize there are headwinds to their top line revenues. So what do? They cut staff. And that's the biggest risk factor. That's it. We know that. Labor is the biggest risk factor. But I don't actually think that Kathy is bearish. They're running this headline that Kathy Wood thinks there's going to be, a reality check, is the headline that they're using here, and or at least the thumbnail. And that's provocative. Oh no, AI is going to have a reality check. There's going to be a big crash or whatever. But I don't actually think she believes that. I think she thinks, she said it herself, the valuations will make sense as this all gets built out. She's bullish on humanoids. She's bullish on the tax benefits. She's bullish crypto. She's bullish the chip sector. Good for her. So that's exciting, and it's a great place to be. I'm looking at ARC flows. They've been pretty stable. They've been stable somewhere around. Looks like if I averaged out, the last inflows here were about $54 million, but you've got sort of ups and downs above and below the zero line. So it seems like stable flows back into ARC. So good for her. It does make me wonder, is there a potential correlation between when we start getting more toppy with the actual ARC stock itself, like the ARK-K, sort of the flagship one. And so if we look at the week chart, ARK-K has absolutely been smoking it. Now, if we zoom out even more, though, that's when we could see the COVID levels and that we're really just retracing, right? So we've come off the lows here. We've really, since liberation, had a really nice retracement. So if we look on a fib basis, it looks like this euphoric market maybe isn't quite euphoric yet. Maybe we still have some room to go. Remember, look how high ARC got, 160 back then. Pretty remarkable. If we now jump over to Let's go take a look at some of the ARK holdings. So we could go to Kathy's ARK and see what the holdings are for RK. Let's see what we've got. So we've got, look at that, Tesla, number one at 12.5%. That's done very well. We've got Roku at number two, Coinbase 3, Roblox, Tempest, CRISPR, Shopify, Robinhood. Robinhood smashed. Although down from some of its highs. Palantir, AMD's in here as well. Oh, interesting. She also picked up the Ethereum treasury play, Bitmine, Circle, Beam, Archer, Teradyne. Hey, we've got Amazon in here as well. Yeah, I mean, these are great in a bull market. So I'm very, I'm glad to see her optimism. But I don't actually think she sees a correction is coming. So I think it's worth having a note about that. Okay, good. What else is going on? Let's see. Let's go listen in over here for a moment.
Just a moment.
All right, let's go try the doomers then. What do we got
of a business in rude health? Do the markets give you enough credit for that?
Well, I think it's fair to say that, the stock price right now, I don't think represents, because there's a question about software at large that I think is misunderstood. When you look at how profitable we are, the growth prospects that we have, models are going to be an on-ramp. And what we have to do at Adobe is just to continue to focus on driving the innovation, on demonstrating the metrics that are powering this underlying business, the early metrics and adoption of all of this technology. And that gives me great confidence that the innovation that we're doing, innovation is alive and well at Adobe, as well as it's being recognized by our customers. So
it ain't being recognized by the stock, although it's still working that triple bounce.
Is where the action is. We're skating to where the puck is. And, I think the stock will take care of itself, but it's certainly undervalued right now, which is why we're buying back a lot of our stock.
Let me address this head on. Wall Street does not see Adobe as a place where AI innovation is happening. And you just said, when inference comes, you will be there. What's the counter argument to the statement that I just made?
I actually think Wall Street has recognized that AI and Adobe and the way we've innovated has actually been stellar. I think they're one.
I don't think Wall Street has recognized that at all. I think Wall Street thinks your growth has plateaued and you've got over $100 billion market cap and people think you're going to get replaced by other AI service providers at a substantially lower valuation, and it's going to kill your growth even more. I think that's what Wall Street thinks.
But I think they're waiting to, see how that accelerates on the inference side.
That was Adobe CEO, Shantanu Narayan. Okay, some more news. It's time for Talking Tech. First up, PayPal shares surging today after the company raised its full-year earnings guidance and announced a new partnership with OpenAI. The deal will integrate PayPal's digital wallet into ChatGPT products, enabling users to seamlessly turn search...
Dude, everybody wants to partner with OpenAI. It's like, if you partner with OpenAI, you make the money. Which makes sense because everybody's throwing money at OpenAI, and frankly, they've got the first mover advantage. As a result of the first mover advantage, they have the users. And remember, that's where the money is. It's where the people are, where are the eyeballs, how many people are opening this app. Whether they're paying or not doesn't even matter. It doesn't even really matter what the annual recurring revenue is, because we know they lose money hand over fist. Nobody really cares how many people are paying for the product. People only care about how many people are using it. And so that is interesting too. And, it makes sense. Partner with OpenAI. Etsy did. A lot of people want to integrate their products and services with OpenAI, and they get nice bounces on them. I wonder, how long do they last, the bounces, right? That's always the tough question. It's like, all right, how sustainable is that? PayPal's going to have to show that they could get user growth. And I think that's where optimism comes from a partnership with OpenAI is like, oh, okay, yeah, cool. Like maybe they can actually get back to user growth. Unless, of course, it's predicated on you already having a PayPal wallet, in which case, like, does that make a difference?
But yeah, right now, that's the milestone of the morning. And it was one of those headlines that hit between 9 a.m. Eastern and 9:34 Eastern time. Whoa, a lot going on. Stay with us. This is Bloomberg Tech.
All right. So, okay, good. So let's now go see what else is going on. We'll go take a look at some of the AI news. We'll go look at the sticks here and see what else we have. Okay, so the Qs are literally still at 630. It's remarkable. I've got MP Material is up 66 bips. We've got a little bit of a move on Beyond Meat, although that's already bleeding a little bit. We've got Wayfair. Netflix is finding a bottom. I've got TLT moving up nicely. I've got Tesla at 463. Nice. I've got Amazon stabilizing. Remember, they're like trying to water down their announcement by saying it's up to 30,000 layoffs now, maybe as low as 14,000. I don't think anybody believes that's anything other than marketing right now. But that's okay. That's them for you, eh? Okay, so let's now go see what other news we got. Okay, so do I buy earthquake insurance? That's a topic I talk a lot about in the course member lectures. So let's see here. Tech stocks rally as AI fuels optimism. AI. Apple tops trillies. Okay, consumer confidence. ADP rolls out weekly. Oh, hold on a sec. What is this? ADP. Oh, this is interesting. ADP will now be releasing payroll data on a weekly basis in addition to its monthly report. This they only gave to the Fed for a while there, and then they rugged it. Figures for the latest will be released on on Tuesdays. Oh. Well, look at this. We got labor numbers. ADP estimates that payrolls increased 14,000 for the 4 weeks ending October 11th. Bro, that's terrible. I mean, that's very interesting. That's in line with the post-adjustment negative 35,000 that you got last time. Because if you added back in the COVID or the adjustment that they made, it was roughly 14,000 if I remember correctly. Interesting. This is literally from today. How fascinating. Oh no, did I post the wrong vid? Oh, I'm so dumb. Well, how? Oh yeah, you're right. Oh my God. How did I do that? This is the second time I made a mistake with that Tesla video. Thank you for letting me know. All right, we'll cut that. That's so interesting. Right here. Fed. Yeah, you're right. The actual underlying file. There we go. Yeah, we need the sombrero. Should have the sombrero. There we go. Yeah, and it's not as long of a video. Oh, it's like 20 minutes. Oh, how annoying. All right, thank you for that. Appreciate it. All right, cool. So now, I fix that really fast. That's also very annoying. So I will fix that. Okay, cool. So now, thank you again for that. Fed. Correct. All right, good. Now, let's go see this ADP report because that's actually fascinating that they just came out with an ADP report and now they're going to do the weekly data. Because remember, they used to keep that private. So we're going to call this weekly ADP report ending October 11th. And today is the 28th. So this is it's basically like we just got a jobs report. Okay. Let's go find out. Well, I really like this because we, I thought we were going to have to wait until November for a jobs report. And here we go. We just got a random jobs report that sort of just fell into our lap. Okay. let's go through the deets. Okay, so ADP will announce a release every Tuesday starting today. The weekly report will provide the change in the private sector employment, current view of the labor market. On a monthly basis during the first Wednesday of each month, we will continue to release a comprehensive jobs report as an independent measure based on anonymized weekly payroll data. Okay. So high frequency data on the weekly basis, and then they'll still do the monthly report based on actual payrolls, it looks like. Okay. They're going to make this available to all simultaneously. So there's no like, you get the data first or it's hidden or whatever. Because remember, the Fed had this. Fed was secretly getting this. Then it got rugged, probably because of Trump. Okay. Preliminary U.S. estimate will provide a 4-week moving average. Oh, it's a 4-week moving average. Okay. Of the latest change. Okay. And then they'll continue to publish the monthly. High frequency employment pulse. Okay. Just to provide that weekly data. All right. Okay, well, that's their press release. So where's the data today? Oh, right here. Literally in bold right here. The preliminary U.S. estimate is an average increase of 14,250 jobs in the week ending October 11th. That's it? That's all they're going to give us? I guess so. Okay. I mean, so like, that's a 4-week basis. It's basically indistinguishable from zero. I hate to say it. It's pretty damn close to zero. The thing is, it all comes down to what is, and it's literally the day before the Fed, right? So they kind of gave the Fed the weekly data the day before the Fed meeting. And they tell us, I would argue what it really tells us is that the market isn't booming, the labor market, right? And that's ending October 11th, which does mean, you know, some of the more recent kind of layoff numbers and stuff aren't obviously going to be in there. I mean, that's going to take a little bit. But that does probably include the government layoffs from September that would have shown up from the Doge layoffs all the way at the beginning of the year, right? So let's think about that. If we get here, if we get 14,250 jobs, and I mean, we don't have the granular data right now, but if that includes a lot of layoffs because of the government, that actually might not be that bad, especially if the break-even rate is pretty low now. ADP weekly data. So I'm going to write down that IMO, this likely includes the September layoffs from Doge early this year at 14,250. If this number includes those government layoffs, although I guess this is more of a private pay. No, it wouldn't though, because this is not an estimate of the whole labor report, so that wouldn't work. Because it's a private payroll, so it wouldn't include that anyway. Yeah, no. So this is just privates. Okay. So this isn't going to include the September layoffs. That's the BL. Yeah. So only the BLS report should show the September layoffs from Doge, which markets will probably adjust back in. This is the private estimate, high frequency data, right? ADP's fine-grained high frequency data in the private sector. This is the private sector. So the private sector growing, 14,250 in private sector is pretty much indistinguishable from zero. and aligns with the pace we had last month pre-adjustment. Let me look at the numbers that we had last month. So I put that in the Meet Kevin app, but if I go to the ADP report, I should be able to find the numbers from last month. ADP. Let's see here. There's the beverage curve. Okay, September 29th. ADP, BLS data. Jobs. It's always about jobs, especially VOT. That was right before the shutdown too. It's kind of crazy. You know, the shutdown's already been going on for a month now, essentially. ADP. October 1st is when we got the data. All right. I will find it. This will be interesting. Just give me 1 sec to pull it here. I guess I could also just pull up the last ADP report. That would be easiest, but I want to get their expectation too. ADP report September. Yeah, let's pull that. Okay, there it is. It was negative 32,000, but they had the adjustment in there, right? And the expectation was like 50,000. Where was the adjustment? Recalibration resulted in 43,000 jobs, right? So that was the September report, was negative 32. But if I now add that adjustment back in, that'll give us a trend line. Okay. There we go. So negative 32K in September, plus adjustment added back in equals, 32 to the minus plus 43 is 11K. 11K jobs created. And then the current estimate through Oct 11, 4-week average, equals 14.25K. Basically stable, right? That sounds stable. That should reiterate to the Fed. Should reiterate 25 BP cut, but no, emergency crazy 50, 100 basis point cut. Which is basically what we talked about in our analysis this morning with the Federal Reserve and our expectations as to whether or not the Fed, what kind of cut we'll get from the Federal Reserve this morning or tomorrow morning. Okay. Fine. That doesn't really change much. Okay, good. So I do like that they're now doing this weekly data, though, because it somewhat replaces the government. It's also weird. Like, there's some people like, Kevin, see, we don't need the government at all. Just get rid of the government. And I'm like, well, yeah, I mean, in fairness, capitalism does tend to fill in gaps when the government isn't available. It's always not always the most efficient because, people fall through the cracks without some kind of safety net. But it's kind of interesting. Okay, so that's good. Okay, cool. All right, let's go see what else. Okay, so now I fixed that. Thanks for letting me know again, whoever that was. I screwed that whole little, for some reason it was the Tesla file. That has now been fixed. So appreciate you for letting me know about that. All right, what if we don't get any data? Well, remember, that's why we're using private data now. Like ADP is providing this because you have to remember ADP is a payroll provider. How many people work for ADP payrolls? ADP, like Amazon uses ADP. How many employees? The company itself has 67,000, but how many millions? Millions use process. 40 million workers. So I would bet that puts them at probably one of the largest payroll processors in the world. Well, at least in the United States. 40 million, we have 150 million workers in the United States. That's, just slightly over 25%. That's kind of impressive. All right. Okay, cool. So now let's go see. Excuse me. All right. Good. That's good. Now that's all set. Anarcho-capitalism for the win. Yes. No government. Who needs taxes at all? I mean, hey, I don't think anybody would mind not having taxes. I can't blame that argument at all. Fed rates, rate cuts. Okay, good. That's for tomorrow. Okay, so now we got an ADP report, and it's kind of, it means no cliff yet. But remember, it's only through October 11th. So let's write that down. Only through Oct 11 so far, but signals no cliff, like no sudden rapid deterioration. Again, we don't have the, some of these latest layoff announcements in there, but you do have like UPS's layoffs, the slow hiring, like a lot of that stuff's already going to be built in. Cool. So that's that. Now, let's go see what the stonks have for us. Yeah, not a surprise. Still flat on the Qs. I'm telling you, I was in the alpha. The alpha. All right, what's over here?
These resolutions, and one in the United States.
Let's bring up those images. You're basically sharing these images as evidence that the machine itself works. What is it that we're looking at here? And beyond that, I think some of the technical questions that the analyst community came to us with is, what is the throughput of this machine? Beyond this being a lab-based experiment.
Yeah, so that's a great question. So it's important to know that the images that we've printed, we've done them under production-like conditions. So this isn't something that is a very long exposure, a sort of one-off. We've been very, very focused on, if we're going to use this kind of light source, it has to be capable of high volume production. And then on the other side, the actual tool itself, we have what is a production quality 300 millimeter wafer tool with the mechatronics in that tool moving at production throughput. Of course, we're not in a fab. We've not built a fab yet. And so the proof is really going to be there. But we feel very, very confident that on the key metrics that go into throughput, we've been demonstrating those.
Okay, so you haven't built a fab, but you are planning an American foundry. Why, James?
Well, if you look at the history of all of this technology.
Okay, let's get into this here. OpenAI's for-profit transition pushes Microsoft above 4 trillion. Yeah, no kidding. Okay, let's see here. I wish Alpha was free when it first came out. It actually was. We did about 100 days of sort of a trial run. Free for the Alpha report. Now, that was just sort of to test if people liked it. Turned out people loved it. So, wow. All right, what is this? So, of course, Trump's teams are now suing the maker of Tylenol because now they're using Trump's very own claims as part of their evidence, even though they've lost the cases before. Fed is flying blind at its next meeting. Not really. They literally just got ADP data. So I guess they're not that blind. 14 killed in U.S. strikes on 4 alleged drug boats. We saw the Amazon layoff talk. All right, so that's no fun. Still sucks for those folks. New York Times talking about the hurricane. I always remember being in school and then like hurricanes were coming and we'd be like, oh, are they going to close schools? So I'd go to like Broward County School Board. I'd always Google this, and I'm like, come on, man, close the schools, come on, close them. And they'd have like a big banner usually. And it was like, oh, we're going to be closed. I don't see anything here. But I always got so excited. And as a kid, it's just like bad because it's like, hey, man, like that's not good. Like, you know, you don't want to be happy about a hurricane. It's like, of course not. I'm just happy about no school. And so I get so excited when that red banner would pop up. School will be closed Thursday and Friday. I'm like, let's go. You know how much RuneScape I could play on dial-up? Let's go. Yeah. You only needed dial-up to play RuneScape. You know how many hill giants you could kill during a hurricane on dial-up? All of them. Okay. Let's see if the information's got any good leaks here. Apple supplier Skyworks agrees to buy Rival. Creative deal making behind Meta's financing. Okay, I want to look at that. Qualcomm's AI hopes. Let's see what they say to bag on Meta here. Okay. Somebody says somebody's near the eye. You know, inside the eye is like the most peaceful thing. It's very, very eerie. But if you've ever been in a hurricane and you've had the pleasure of the eye going right over your property, which is not a pleasure at all because the wall of the eye is the worst part of the storm. Once you're actually in the eye, which, you know, can be, I don't know, probably something like 60 miles wide, is actually very, very peaceful. So when I was a kid, we had to listen to AM radio to see if school was canceled due to thunderstorms. Wow. Well, I mean, like we used radios as well, because you would just lose power. So you'd put double D batteries into those old like boom boxes or whatever, just to try to get the radio too, to see what the hell's going on. But yeah, I mean, there was, you're right, a time where there was no Google. Had that privilege. But yeah, once the power goes out and you don't have backups, it sucks. Okay, it took a year and some financial acrobatics, but Meta and a small army of bankers and lawyers were able to secure funding secured, for a $27 billion data center project without any immediate damage to the company's finances. Now, how'd they pull that off? A private letter from the SEC helped seal the deal. What? How does the SEC get involved in this? Let me see how wide the eye actually is. Let's see. Hurricane eye width. 20 to 40 miles. Nah, that's not 60. The largest recorded eye was 230 miles wide. Oh, so I guess it varies. Hurricane Andrew had a 7-mile wide. Wilma's eye contracted to just 2.3 miles. Oh, so it totally varies. Oh, okay. All right. So, I mean, I guess it could be 60. I guess it depends on the actual hurricane. That's very interesting. That's very, I find that quite interesting. I don't know. I like that kind of stuff. As a Florida native, yes, the eye is probably the coolest thing you can see. Yeah, I agree. When I was in high school, Mayor Bloomberg said, get your arses to school. Yeah. All right, anyway. So how Meta and Morgan Stanley pulled off fundraising and whether other companies racing for dominance in AI will be able to match their feat is probably helping shape one of the biggest investment booms in AI data center projects. Investors this month snapped up bonds used to finance Meta's Louisiana data center, Hyperion, which is a big part of their AI ambitions. Bond giants PIMCO and BlackRock were among the buyers of the $27 billion of debt financing. Okay. Blue Owl is putting in $2.5 billion of equity. To make the deal work, Meta placed the Hyperion project into a special purpose vehicle. Blue Owl will own an 80% stake in the special purpose vehicle and control its board, allowing Meta to keep the debt off its balance sheet. Bro, come on, man. That just sounds like a scam. What the hell? Meta has further limited the financial impact by breaking up its leases into 4-year chunks, so rating agencies won't consider them debt. Dude, this sounds like a scam. This is financial engineering to keep it off their balance sheet. Bro. To get the deal done that way, Meta walked a tightrope through accounting rules, bond rating agencies, and financial regulators. Its goal was to limit its long-term liabilities, a key measure of the company's financial health. Yeah! The analysts, Meta obtained a letter from the SEC effectively approving its accounting treatment. Wow. A Meta spokesperson declined to comment. Of course they declined to comment! Hey, how come you guys structured this like a scam? No comment. The Meta spokesperson declined. The company previously said the deal was designed to support speed and flexibility. Right. Meta also reached out to credit rating agencies, Moody's and Standard & Poor's, to ensure the deal wouldn't harm its standard investment grade rating. Both agencies said last week the transaction shouldn't have any immediate impact on Meta's credit rating, though both highlighted risks with the deal. The result is that Meta will be able to develop its biggest data center ever without taking any debt, despite it literally all being debt. Wait, so who's responsible for the debt? Blue Owl will own an 80% stake in the SPV and control its board. So who owns it then? I guess the bondholders. So Meta gets the data center. I guess that's what they want. While freeing up cash, Meta has dramatically ramped up its CapEx. Historically funded with cash, but now it's turning to outside investors. Right. Because we're getting to that phase of the cycle where you start having to borrow money to kind of keep the boom and the cycle going. What phase of the cycle is that? As long as capital markets are willing to do this, why not? I mean, that's also true. It's sort of like, hey, if people want to invest in this sort of deal, I mean, they're probably being sold that it's backed by Meta, that it's like the Meta data center, but it's really not. It's backed by, Blue Owl, who's putting up a $2.5 billion equity stake. Bankers were closely watching the Meta deal as a test to whether traditional bond investors would embrace the unconventional measure. XAI is using a similar arrangement. Well, we already know they're out of money with Valor Equity Partners. Right. They've been blowing Elon for a while. Meta shareholders are expecting to learn more about the exact financial impact of the Hyperion deal when it reports earnings tomorrow. Okay. Zuckerberg in July said that the Hyperion could end up using 5 gigawatts of power. Meta's partner in the project, Blue Owl, brought debt investors on the board by offering a rich yield for relatively low-risk bonds. The Hyperion data center bonds are priced with a coupon of almost 6.6%. Wow. Who's paying the debt? I mean, Meta has to be paying this debt, right? Like, Meta has to be paying this for this. Meta's got to be paying for this through the use of the data center. It's probably still cheaper, though, than leasing. Huh. And then, of course, these bonds have a AAA rating. Right. Yeah, because we're going to assume that the value of these is never going to go down. So what happens is, if the value of the chips crashes for some reason, the collateral plummets, and people who thought they had Meta backing don't. I don't know. Maybe they're sophisticated enough to realize they don't have any Meta backing here, But I think people are being sold, yeah, you're getting Meta's data center at a 6.6% yield. Oh, Meta data center? That sounds great. Wow. So it's backed by Meta? Meta pays the bills. Oh, wow, that's great. And then it all goes to crap. The bonds go to zero. Hey, how come Meta's not responsible for this? Sorry, bro. That was actually an SPV. What the hell is that? That's a special purpose vehicle. That means you're screwed. Oh, that's not fair. Oh, man. Insurance companies want to stick to investment grade. Investors bid up the price of bonds, pushing down their yields. PIMCO purchased $18 billion. BlackRock made a multi-billion-dollar purchase. Large chunk went to fund managing money for insurers. Okay. Wow. The bonds come due in 49. Wow. 24-year time horizon. Relatively long maturity. Yeah, no kidding. Oh, yeah, they get to lock in the yield. I mean, I get it. But 24 years on that chip facility? Oh, man. Wait a sec. We just financed a $27 million or billion-dollar data center at 24 years. This is actually, if you think about it, brilliant for Meta. Because that butters out the payments for, well, I mean, they're going to be interest-only payments, but this is great for Meta. This is retarded for the bondholders. Great for Meta. Bondholders think they're locking in a 6.6% yield or less since some sold at a premium. The problem is 24 years, all the collateral chips will probably be actually almost certainly be worth zero. Like, I hate to say it, but in 24 years, I don't care how good of a Blackwell chip you were shoving into that data center today. In 24 years, that Blackwell chip is going to be worth zero. I don't know. Am I wrong about this? Like, what am I missing about this? Like, this sounds like bad. Somebody's gonna eat shit on this. Before it approached investors, Meta spent months working with Morgan Stanley bankers to devise a financial structure. See, this even just sounds wrong, to devise a financial structure. Meta got a great deal on this. This is a win for Meta. Because Meta ain't holding the bag. Dude, this is a win for Meta. Meta isn't holding the bag. Oh, that's great. Meta ain't the bag holder. Meta gets all upside with no downside. Bro! Honestly, you kind of got to give it to Zucky Ducks. Scheissers. Damn. Meta is the first tech giant to use this structure to fund the data center for its own use. Wow. Meta also appeared to find a way around accounting rules that would normally treat its lease as a long-term liability. Right. Instead, they agreed to sign a series of renewable 4-year leases at 11 individual buildings. That's such a scam. That allow them to treat them as operating leases instead of financial leases, which must otherwise be reported as long-term liabilities. That's a scam. The company is promising a payout to investors known as a residual value guarantee if it walks away before 2049. Potential payment won't immediately count against their debt. Yeah, but we don't know how big that payment is, that residual value. There'll be some discount to this, right? Wow, they even have an escape at a discount without having full bag of debt, right? Because they'll net present value this down. Fail to save. Oh no. Wow. Yes. Yeah. At the end of the day, they're willing to pay up for the flexibility to walk away from this. Holy smokes, man. Meta recognizes everyone, explains what investors are. All right. Wow. Oh, Q's went up a little bit. I gotta get some coffee, but I want to see Meta. What's Meta doing on this? This is exciting. Meta. 750. All right. Let's listen in here for a moment. And I'm going to get more coffee.
Talking about NVIDIA, as you mentioned, that's really been in the spotlight today. And this is because we've had some information trickling in that NVIDIA and Nokia could be having some sort of partnership. We earlier saw shares of Nokia halted for volatility, but earlier surging as much as 22% here. And this with NVIDIA set to invest about $1 billion into Nokia in terms of its AI networking push. Also, over into shares of Microsoft. I'm keeping an eye there. It's surging for its best day here since July. And this, of course, with a deal with OpenAI. Of course, we know OpenAI has been a major backer here of this company. OpenAI is set to give the company a 27% stake in all of its work here. And of course, we know that Microsoft will receive access to some of OpenAI's technology through 2032. And lastly, over in PayPal land, we're really keeping an eye on this company here. Of course, another partnership here with OpenAI. We're seeing shares of the company up more than 10% here as we're keeping an eye on the stock PayPal. And this is after the company raised its full year earnings guide, but also it did mention that it's seeing a bit of a pullback in consumer spending. But of course, the real highlight here is this partnership that is sketching out here with OpenAI.
Alrighty then. Okay, cool. So that's crazy, but whatever. Let's go see what else there is out here. So we talked about this. The supplier, we talked about this, talked about this. Okay, Microsoft, we get gets 27% stake in OpenAI. Access to models, wow. Microsoft will get a 27% stake in OpenAI valued at $135 billion and will obtain the rights to use their IP through 2032. They were so brilliant to snag that deal early. That was pretty impressive. They got a pretty good snag there. Microsoft will give up its rights of first refusal over compute contracts. That's okay. I don't think they want to build so many more data centers. There's definitely some hedging going on there. Okay. In a recent exchange, OpenAI had committed to spend an extra $250 billion on Azure rentals over an unspecified period of time. Blah 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 blah. All right, that's not that fun. All right, how's our 10-2 yield doing? Oh, nice. Very nice. Under 48. Yeah, the NVIDIA Nokia stake. I wonder how that's moving NVIDIA stock. NVIDIA's up 1%. AM Dizzle is up 60 bips. Nice. Yeah, it's a little bump this gets. They end up diluting, it seems like. Dave & Buster's still bleeding. How about Adobe? Still moving on the triple bounce. Nice. Okay. So let's see here. What to expect from NVIDIA? A new
taking
chip?
place in Washington. He's speaking to a broader audience, and it will include geopolitics.
Many are hanging their hat on the fact that maybe he'll talk to China or future innovations there. But more broadly, this is a man who understands how to hype his roadmap. He understands about not just giving you the Blackwell context and the sheer scale of demand, but pointing us to a Rubin. What is he going to talk about end markets? Why is he putting money into Nokia, which we all know for its phones, but of course they don't make them anymore. It's about telecoms equipment. What can NVIDIA do for the future of our telecoms? What can NVIDIA do in return for putting money into companies that then spearhead the future of AI data centers? What is he going to talk about robo-taxis? How is he going to talk about autonomous vehicles? How is he going to discuss some of the other key bets that he's been making?
Wait, what's wrong with the audio? Would the audio go funk? Can you hear me okay? Audio glitch? Uh-oh. Is this better? Or is this better or worse? Or did the audio just cut out? Audio's cutting? Can you hear me okay? Is my audio gone too? Nothing? Audio. Somebody says audio, so no, a bunch of people. I had to restart YouTube app. I hear you fine. I can hear you. Okay, no, good. Audio's fine. All right, everybody's fine. All right, whatever. So let's go. Thank you. Okay, let's go back over here. Let's see. Actually, oh, look at QCOM. QCOM is down 3%. I mean, that's just a little bit of a give back after the run that it had here. Okay, that's fine. That's normal. We got the ADP data. We got the 10-2 yield spread. What do we have over here at WAPO? Supreme Court won't hurt America by striking down tariffs. This is an opinion piece. I actually do think that the Supreme Court is just going to try to punt this. President Trump made fantastic claims. Okay, Supreme Court has the power to curtail. They do. But this person doesn't think that they will. That's all right. Hong Kong shadow war. Let's see here. GOP-led House Oversight Panel finds Biden's actions illegitimate. A report issued by the committee questions the legitimacy of Joe Biden's executive action because of AutoPen. Trump puts allies on obscure board to decide White House ballroom fate. Alright. Let's see. Amazon, we saw the workforce cuts. Okay. How's Axios this morning? Oh, and then we'll check Politico too. Punch. There we go. What do we have here? So, yesterday, special session, Donald Trump leaned heavily on Republicans. Virginia Democrats are planning a last-minute redistricting push. All right, that's boring. Behind the curtain, Trump claims the power to do almost anything. Well, yeah, we realize that at this point, don't we? House report reveals post-debate turmoil on Biden's team. Oh, this is going to be so juice. I will never forget Biden walking out on that stage after the debate. And actually, it was before, right? But you remember where we're going with this. But look at this. House report reveals post-debate turmoil on Biden's team. We all remember his face when he walked out onto that stage. And we were covering it live, and we're like, oh my gosh, he's a zombie. I want to say I was the first YouTuber to make a video and go, this guy needs to step down. Which a lot of people, I hate to say it, they kind of wait to see what people say on social media before having an opinion. I don't do that. I just tell you my opinion right away. You know, it's kind of like, you know, you see certain podcasters will sit there with the iPad up when they're live streaming, not to mention any names, Patrick Bet-David, but it's a way of studying what people are saying in the comments on a live stream so that they can react appropriately. It's kind of brilliant because it keeps you aligned with your audience, but, you know, anyway. So let's take a look at this. Axios is now reporting after Joe Biden's disastrous debate performance last fall, his team fell into civil war. Well, yeah, dude, because he needed to go. They needed to do what Nancy Pelosi said. I can't believe I'm saying that. And they needed to hold an emergency primary to find the best candidate to replace Biden because it was over. Instead, they assigned Kamala because, you know, she didn't want to be, you know, passed up because, you know, why would you pass up a black woman? That would be wrong. It's like, well, we should have had a primary to determine who would have been best for Democrats to actually have a chance against Donald Trump rather than just assigning somebody, but whatever. With long-term aides insisting he was fine, well, that was the lie. We all knew this. And others, including his chief of staff and cabinet members, saying he should consider exiting the presidential race. Wow. You know, this by the way, coming at the same time as now this AutoPen panel finding, which the Washington Post is reporting on, citing AutoPen use. GOP-led House Oversight Committee calls Biden actions illegitimate. Now, obviously, this is the Republicans right now are doing anything to get favor with Donald Trump. We know this, right? But the Republican-led House Oversight Committee released a report on Tuesday questioning the legitimacy of the AutoPen. The report is the result of a 5-month-long probe spurred by accusations made by Trump, of course, about Biden's mental fitness. Republicans have charged that Biden's aides covered up a decline in the then president's cognitive ability. Yes, we also already know that. And that the Biden administration misused the presidential AutoPen to issue executive actions without Biden's direct involvement. Right, and then this sort of rises the question of, like, like the people elected Biden, not Biden's staff. The committee of Republican majority said Tuesday it found no record that Biden approved executive actions in several instances, including one related to presidential pardons. Mind you, when it came to the pardon of like his son, Biden actually signed it himself rather than using AutoPen, which is very interesting. The allegations brought by Trump and Republicans about Biden's use of AutoPen prompted a rare rebuke earlier this summer from the former president, that Biden made every decision. The Biden spokesperson dismissed the findings in the oversight report, saying there was no conspiracy and no cover-up. This investigation into baseless claims, this is their argument, that's fine. So do they say anything else here? Long been targeted by the House committee. We know that this is mostly political. The new report states that unless the Biden administration can prove the president approved a given action, the committee deems that those actions are void. I mean, this will end up getting litigated in courts, potentially. This could set some groundwork for that. But I think what's more interesting is this turmoil talk. So after the debate, in a report released Tuesday, Biden top aides have gone on record to respond to questions about the former president's declining health and what aides did to obscure it from the public. In the result of the panel interviewing members of this is the result of them interviewing members. 3 of Biden's closest members pleaded the 5th. Oh, that's your constitutional right. Driving the news. The Biden chief of staff, Jeff Zients, told a panel that he and National Security Advisor Jake Sullivan, Commerce Secretary and VA, all expressed concern about Biden continuing his re-election campaign after the debate. Right. So basically his cabinet is like, you're done, dude. Within a few days after the debate, Biden was aware of my view that I thought it was prudent to consider getting out of the race. Wow. I mean, good. He actually had some honest people inside. He urged Biden's doctor, Kevin O'Connor, to do a full workup of medical tests on the president. I wonder if that actually happened. It probably didn't. Other aides, however, told the committee about their concerns, that the concerns over Biden's health were overblown and media-driven. Bro, no, they weren't. We saw it firsthand, you lying scumbags. Man, I hate these. People don't want to lose their jobs. They want to stay in the White House, you know? Asked if he understood that some voters watching the debate felt that Biden was struggling cognitively, top aide Steve Ricchetti said, "This isn't how the country perceived it. This isn't true." Bull crap! I watched it live. The second he walked out on that stage, I called out this guy was done. That debate was a disaster. We saw it before he opened his mouth. We saw it after he opened his mouth. We knew it after the debate was over. It was done. You're a lying scum, Steve. He blamed the chattering class for overreacting and saying it was a cheap shot. Oh, you're smoking crack. Biden had pretty good answers. Stylistically, I was worried about his voice. Mike, you're a dumbass too. And I'm not even being political. This is just straight logic. Biden's top policy advisor, Bruce Reed, attributed part of Biden's performance to the president's childhood stutter. This had nothing to do with his stutter. The guy was falling asleep on stage. He couldn't remember what to say. He exhibited all the classic signs of dementia, which we broke down as well. Come on. Biden's inner circle would end up shrinking as skeptics were pushed out. Oh, and then they fired the skeptics. I mean, that's the same thing Donald Trump does. You know, as soon as you say something bad about Trump, you get fired. The committee's report was only issued by the Republican-led majority, includes cherry-picked parts of testimony. That is fair, too. It's very likely that this is all just going to be, like, you have to consider the source. But we saw the debate, right? So this doesn't surprise me. None of this seems like it's unbelievable. Since discussed Biden's age, long-term trouble with names and dates, got worse with age. It's never been a strength for him. Jill Biden was heavily involved in managing Biden's schedule, pushing him to get more rest. Yeah, like his midday naps. Jill Biden wanted to make sure the president had enough time to himself and that he wasn't overscheduled. And then, I mean, in fairness, like, you got to give credit to Trump, even if you don't like Trump. Like, dude, the guy's schedule's insane. Insane. Jill Biden wanted to continue to make sure the president had enough time to himself. Yeah, we saw that. Point person for the president's schedule. Conversation about stage managing Biden and reducing the number of steps he needed to take in public. Come on. That's already a red flag. Hey, guys. forget about 10,000 steps. We actually need to make sure we stay under 1,000 steps today, okay? We don't want him walking more than 1,000 steps. We're gonna keep the cameras on for these 59 steps that he's gonna go from the door to the helicopter. And that's it, okay? We've only got 941 more steps that we can afford. And we only want 10% of those to be public. That's just a scam. You know, the president's health shouldn't be hidden from the public, and we know it was here. And that's not to say that, you know, they didn't hide the severity of Donald Trump's COVID illness. You know, those staged photos at Walter Reed, come on. Trump wasn't doing too hot. He wasn't doing too hot. He got lucky with the monoclonal antibodies that they caught this stuff fast. But he wasn't doing too hot there when he went to Walter Reed. And we know that. We know there was some covering up over there going on as well. So in fairness, it happens on both sides. But that said, it's kind of interesting to see Axios say there was civil war inside of the Biden White House, because it just tells us what we already knew. That there were people inside who were covering up the true decline of Biden. And even his own closest advisors knew it.
We have now seen that inflection point. Accelerated computing, its moment has now arrived. However, accelerated computing is a fundamentally different programming model. You can't just take a CPU software written by hands, executing sequentially, and put it onto a GPU and have it run properly. In fact, if you just did that, it actually runs slower. And so you have to reinvent new algorithms. You have to create new libraries. You have to, in fact, rewrite the application, which is the reason why it's taken so long. It's taken us nearly 30 years to get here, but we did it one domain at a time. This is the treasure of our company. Most people talk about the GPU. The GPU is important, but without a programming model that sits on top of it, and without dedication to that programming model, keeping it compatible over generations. We're now CUDA 13 coming up on CUDA 14. Hundreds of millions of GPUs running in every single computer, perfectly compatible. If we didn't do that, then developers wouldn't target this computing platform. If we didn't create these libraries—
Oh, what's this headline? Netanyahu orders IDF to carry out powerful Gaza strikes? Come on.
One application after another. I mean, this is really the treasure of our company. cuLitho, computational lithography. It took us nearly 7 years to get here with cuLitho, and now TSMC uses it, Samsung uses it, ASML uses it. This is an incredible library for computational lithography, the first step of making a chip. Sparse solvers for CAE applications. cuOpt, a numerical optimization, has broken just about every single record. The traveling salesperson problem, how to connect millions of products with millions of customers in the supply chain. Warp, Python solver for CUDA, for simulation. cuDF, a data frame approach, basically accelerating SQL, data frame databases. This library is the one that started AI altogether, cuDNN. The library on top of it, called Megatron Core, made it possible for us to simulate and train extremely large language models. The list goes on. MONAI, really, really important. The #1 medical imaging AI framework in the world. By the way, we're not going to talk a lot about healthcare today, but be sure to see Kimberly's keynote. She's going to talk a lot about the work that we do in healthcare. And the list goes on. Genomics processing. Ariel, pay attention. We're going to do something really important here today. cuQuantum, quantum computing. This is just a representative of 350 different libraries in our company. And each one of these libraries redesigned the algorithm necessary for accelerated computing. Each one of these libraries made it possible for all of the ecosystem partners to take advantage of accelerated computing. And each one of these libraries opened new markets for us. Let's take a look at what CUDA-X can do.
Ready, go!
And Jensen Huang speaking at NVIDIA's GTC conference in Washington,
it.
D.C. We'll revisit that conference when he comes back on stage and if there are any headlines to let you know about. But we do want to just let you know right now, there is a headline here. Benjamin Netanyahu of Israel ordering the IDF to carry out powerful Gaza strikes. And we're looking at the shekel lose value against the dollar following this headline. I do want to get a quick thought here from Caroline before we let you go. Caroline, did you hear anything from that conference that suggested, from keynote speech that Jensen Huang was delivering, that suggests that he is speaking to a broader audience, including perhaps the policymakers who might be in Washington attending that event?
He gives context, doesn't he? He's trying to remind everyone why NVIDIA is the most valuable company in the world. It's because it invented basically the backbone of what we're doing for generative AI now. The GPU, the graphics processing unit, which was used initially for gaming, which is where we left him, has just evolved to become so much more of an integral use case within generative AI and AI more broadly. Everyone is trying to play catch up. AMD, now you see Qualcomm coming in, but he is trying to make this digestible for the masses because his stock is important for the masses.
And Ayako, I just want to bring you back into the conversation quickly here. We talk about how this speech is happening as President Trump is in Asia, and we know that Jensen Huang and President Trump will be meeting on Thursday. Jensen Huang has a good relationship with both Washington and Beijing. That sounds like a good thing, but is it in practice? Does it perhaps set up unrealistic expectations?
I don't think so. I think they've been pretty, upfront about the issues in China and just where they are positioned. I think it's more about just the long-term outlook for AI and where we want this position. And I think that's why it's so important for American companies to be, in that pole position, in that leadership position for AI.
Joanne, what about you? What's your take on that?
I don't expect Jensen to say anything in advance of what President Trump might say later in the week. But the early snapshot of that keynote reinforces NVIDIA's position as market leader. That software that they have developed over decades is a barrier to entry for others. So it's interesting to see how much traction other chip makers are getting, because you don't get to use CUDA on the other architectures for AI. So there must be a trade-off. Companies that adopt the other chips can make. Okay, we're going to have to write our own code. We're going to have to update our own code, but it's worth it because NVIDIA chips are so expensive relative to the other options. So it's a barrier that's beneficial to NVIDIA, and we'll see how long that barrier holds in place.
All right, good stuff. Ayako Yoshioka is Senior Portfolio Consultant at Wealth Enhancement Group, and Joanne Feeney, Portfolio Manager and Partner at Advisors Capital Management. Caroline Hyde, you're going to stay with me for a little bit here as we just kind of wrap up our thoughts here on Jensen Huang and his big NVIDIA GTU conference. You mentioned that this is the second one this year. What happened at the first one? How does this move the ball forward?
Well, he tends to usually present out of California, the home of NVIDIA, and it tends to be a gathering of all the NVIDIA fan, and that fan base has become...
Yeah, and I want to see how the stocks are moving on it, too. The Qs are actually at 47. It's been slow, but it's got a little bit of a move here today. NVIDIA, 1.2. Okay, that's decent, along with AMD. We'll take it. Why not? That's a good yield. You've got Tesla's doing very nicely, 466. That vote coming up, it's bullish. It's short term, quite bullish, as we've been talking about for Tesla. Let's see here. Gave up that 116 already on BTC. That's interesting.
Named what that's going to do for the future of autonomous vehicles, for the future of humanoid robots. We're just seeing at the moment over at the GTC talking about the evolution of where this goes next, the fact that it's going to be breaking down barriers in healthcare, the fact that we're going to have a humanoid robot within all of our homes right now, and it's going to be really integral to him being able to talk up what the overall market value is for him to vindicate the overall valuation of his own company. Yeah. But I think he's going to be talking about quantum as well. Remember, that's going to be a real area of growth for the story.
Yeah, he's become an ambassador for the industry at large. And, I noticed that you were taking a look at NVIDIA's share price. It is higher right now by about 1.2%. But if you look at the performance since, let's just say, late July, it's kind of been lagging behind some of the other chip makers, notably Intel, for instance, and Broadcom. Is the excitement not dying down a little bit, but are people kind of looking at it with a more critical eye, given that other companies are now getting involved and they're thinking maybe I'm rotating to these other names?
Or maybe they feel that given the valuation increase that we've seen, we can start to spread our wings. And many a company is trying to spread their wings. Broadcom doing well because it's about custom design, ASICs. The fact that they can make a chip and design it and put it into deployment for an Alphabet, for an Amazon, so that don't have to just rely on NVIDIA homegrown GPUs, but you can innovate and make your TPUs if you're over at Google Alphabet.
Tensor processing units and that. Okay. All right. So let's see here. This is an interesting story. Take a look at this. So this has to do with the repo man. You know, auto delinquencies are at the highest level ever since the 2008 financial crisis. I mean, you can even see it here. Delinquency rates on some auto loans hit record levels. Car repositions are on the rise. Take a look at this. We spent the night shift with the repo man, who is busier than ever. This is the repo man. He literally has a bumper here that says, "Don't make it, we take it." Also known as a recovery agent, apparently, for Speed King's Recovery. Okay. All right. So this is in Virginia. From the cab of his tow truck, George Dottie clicked a remote control to slide the boom under a parked Chevy Trax to grab its front tires. In seconds, the car was gone. I want to hear some of the stats on this. Just like, oh, wow, look at the lot, man. They just pile them in here. This is called the recovery yard. Owners managed to reclaim their cars 30% of the time. Wow! Only 3 in 10 cars that get repoed, according to him, actually end up getting recovered, which is kind of sad because that means, you know, 70% of the time you see somebody's car get repossessed, it's gone for good. That's sad, you know, and then they get sold obviously at the auction blocks or whatever. It's an estimate of 1.7 million vehicles were repossessed last year. The most since the recession of 2009. This is why people are frustrated in this sort of K-shaped economy. Groceries are more expensive, rent's more expensive, cars are more expensive, interest rates are more expensive. Everything's gone up since post-COVID, except wages aren't rising really much anymore. In fact, a lot of people are just getting laid off. It's a really tough time. The people who are really winning right now are asset holders in like the stock market, or if you have a lot of crypto or real estate. But what good does that do you if you're just trying to get by paycheck to paycheck? There are signs that the surge continues. This year's repo volume at Cox's auctions was up 12% through the end of September. Wow, and still rising. It's like history is repeating itself. Yikes. Pandemic-era consumer protections left the repossession industry idle. Now, he said, companies are making money because of volume. It's so big, you're in a target-rich environment. The catch, volume is more crucial than ever. Middlemen, known as forwarders, are increasingly hired by lenders to oversee the repossession process, pushing the companies that actually find and recover cars farther down the food chain, shrinking their profit margin. Okay, so more people involved, fine. So he typically gets $275 from car forwarders compared to $550 from when he deals with the banks. So you're putting more middlemen involved. Okay, this is just talking about sort of some of the fees. But really what this is a symptom of people not being able to afford the freaking cars. It sucks. I mean, you saw what Tricolor was doing. They were like, what happens is these institutions, these Wall Street institutions back these lending companies like Tricolor because Wall Street companies can get a high yield by packaging up these garbage loans, and then they slice them up, slap a AAA rating on them, and they get a high yield, add some leverage to it, and that's how, you know, Wall Street makes money. Wall Street gets their fees, they sell a high yield to their investors, and everything's fine until everything collapses. Tricolor, for example, you know, they were doing loans to illegal immigrants. No documentation of citizenship required, no credit required. And so it's no surprise they went bankrupt, especially when Trump's immigration raids really, you know, started taking over. No surprise. But really what happens is the people who get screwed are the people who are just trying to work hard and have a car to get from point A to point B. They get screwed by these predatory loans that basically are designed to make all of the profit back on the loan, assuming that the car is going to get repossessed and the companies are just going to get some residual value. So it's almost like you make the cost of the loan so expensive that you try to cover any loss that you might have if the buyer just makes 3 payments. And then if they default, you've already budgeted it in. How crazy is that? Because the loans are so expensive and predatory. That's wild. Just wild. So let's see here. Okay, playing Where's Waldo? Mobile command center, that's fine. Despite the technology, dead ends are common. Many addresses are wrong. Well, of course, I mean, people are going to do whatever they can to try to avoid, this loss of vehicle. Like, they don't want to lose their car. So, of course, addresses are going to be wrong. License plates are going to be wrong. No surprise. Dozens of captive cars, including late model BMW. Oh, well, there's your first mistake right there. Once you have a late model BMW, I mean, what do they say? You have to have a good amount of money to buy a new BMW, but you have to be a millionaire to have a used BMW. Don't sue me, BMW. It's the reputation you all built, from what I hear. Some months ago, Dottie said a man and a woman jumped onto their Dodge Charger after its back end was already aloft. The man put it in gear and floored it. The car broke free of the tow truck, minus a dangling rear bumper. Wow. This just sounds sketch, man. Repossessing cars his entire life. While he was off duty, a Rolls Royce caught his eye in a garage near a Maryland casino. The app confirmed it was one his company had long sought. Dude, can you imagine this? You're off duty and you're just cruising down the streets of your city and you're like, oh, check out that Rolls Royce. Wait a second. That's one of the ones I'm supposed to repo. Wow. Such high value cars are whales that bring the company higher fees. $900. I feel like you're almost risking your life trying to take these things. Like, I feel like repo people, they need like body armor or something, man. That's scary. Okay, let's see here. As a recent night shift wore on, kept creeping up. Car after car. Okay, that's fine. Let's see what else we have here. Yeah. I mean, it's just sad. Let's go see what's going on here. Let's see. Most liked. Signs of financial difficulties. It's getting worse. Amazon, UPS. Yeah. Low wealth workers are doing worse. High wealth investors are doing better. It's a tier 2 economy. 2-tiered economy. That's exactly what it is. It's much easier to make small percentage off the rich, but powerful people richer. Yep. No, it's crazy. Yeah, somebody here in the chat says, yeah, a lot of them wear vests. I think you have to. You have to. Somebody else says, make your car payment here. Yeah, no kidding. No, it's scary. 2-tier economy. Surely this is a good sign for our economy. Yeah, nice irony here. Back in the day, repossession banks could get keys cut if they couldn't find the car, drive it away. Right, yeah, I mean, you're not doing that now with the electronic keys. It's a little harder now. Wow. It's just sad. Yeah, new cars, it's true. The new car average is now $50,000. I mean, I remember when I was a kid, it's like, man, this car's 19, man. It's almost $20,000 for a new car. Now it's like the average new car is $50,000. It's insane. Car payments used to be like $199. And now people are paying $600, $700, $800, $900 for car payment. It sucks. 2-tier economy, man. All right, so that's on repo, and then what do we have here? Okay, Donald Trump and Xi Jinping are discussing lowering tariffs, so that's probably why the market's moving. We were expecting this on Thursday, in fairness, not today. So this is coming way earlier than expected. Okay, let's see here. Let's see what's going on here. All right. So this is a Wall Street Journal breaking news. Bayerischer Mistwagen. Nice. All right, here it is. Donald Trump and Xi Jinping to discuss lowering China tariffs for fentanyl crackdown. Now, we were expecting to get this on Tuesday. on Thursday. Today's Tuesday, right? We were expecting to get this on Thursday. So we're getting this 2 days earlier than expected, which is leading the market to get really excited here because we're getting good news earlier than expected. We're already expecting mostly bullishness out of Powell tomorrow, but we were expecting to get the China news on Thursday and potentially some skittishness before Thursday because of the anticipation of, oh, is Trump going to actually be able to pull this off? Here we are on Tuesday getting a present 2 days early. And so far, it looks like I'm getting some headlines here because this is just now breaking news. Trump, Xi to discuss lowering China tariffs for fentanyl crackdown. U.S. would cut in half the 20% levies on Chinese goods imposed in retaliation for the export of chemicals that make deadly synthetic opioids. At the same time, NVIDIA unveils new quantum equipment to connect quantum processors with NVIDIA chips. Nice. Okay, so then we have, also now at the same time, you've got Israel bombarding Gaza. Now, one of the wings of Hamas is saying it will postpone Tuesday's handover of deceased hostage body it recovered because of now what they're saying are Israelis' violations. There's a lot going on right now. Okay, but let's look at this China news because this is what the good news is right now. The rest doesn't, the quantum computing part sounds good. The Israel Hamas thing doesn't sound good. It's hard to negotiate with the splinter cell, group. What do you got? Like 30 different Hamas groups out there right now? So there's no core leadership. How do you negotiate with that? But anyway, take a look at this. The U.S. would roll back some tariffs on China if Beijing cracks down on the export of chemicals that produce fentanyl. That's an easy win for China to pick up because they could easily say, oh yeah, we'll do that. Yeah, we'll crack down on crime and bad chemicals. Sure, yeah, we don't mind. China is expected to commit to more controls on the export of precursor chemicals. Of course, that's an easy win. So if Trump gives them an easy out to taco, then we get taco. What's the taco scale right now? Because it's basically going to go up. So if we go to meetkevin.com/data, we can see where the taco scale is. The taco scale right now is right here, 8.9 out of 10 on the taco scale. Pretty much, and I wrote Trump pretty much full taco on China. Okay, honestly, we're probably now at like a 9.2. I probably got to revise this up. We're even more taco now because this is such an easy out for China. Hey guys, we will lower our tariffs in half if you just promise to try a little harder on those deadly chemicals. Okay. All right. It's a deal then. We'll cut the tariffs in half. A synthetic opioid blamed for hundreds of thousands of drug overdoses. In return, the U.S. could cut fentanyl-related tariffs by as much as 10%. And that's pretty bullish. Bringing those, because that now brings your average tariff from like 55% down to 45% on China. There it is. That's the very next line. Currently around 55% down to 45%. Yep. That would put China's average tariff rate closer to those of other trading partners, potentially reducing the price competitiveness of manufacturing outside of China. Right, because that's what China doesn't want. People don't want to have to leave China and relocate, and China doesn't want that either because, well, frankly, China wants to be the manufacturing powerhouse of the world, so it's sort of a win for China. Makes sense. Goods from India and Brazil face a 50% tariff. Right, so that potentially prevents Apple from leaving Foxconn China to do Foxconn, India. The Trump administration has said Chinese goods shipped through the Southeast Asian nations would face a 40% tariff, higher than the 19 to 20%. The administration reached 2 trade agreements for frameworks with Southeast nations this week, including provisions that prevent China from exporting goods through at below market prices. That's fair. That's the transshipping argument. Fentanyl negotiations, a longstanding issue. I think, honestly, the fentanyl stuff was really just sort of a ruse to get negotiations going with China. Under the framework, China is also expected to commit to a significant purchases of American soybeans. Good. That's what they consistently had been doing. So now they just come back to do what they had previously done. Beijing imposed retaliatory tariffs. Chinese negotiators have insisted that China won't lift retaliatory duties and resume purchases of American soybeans until the fentanyl tariffs are removed. So who's actually winning here? So to me, it somewhat sounds like China is kind of getting what they want here. I'm curious to see if the Global Times, which is basically your Chinese propaganda, has anything to say about this. So U.S.-Japan summit. China, India. This is the ASEAN protocols. Fine. I don't actually see anything here with China and the United States yet, because this is just such breaking news. So I'll have to keep an eye on this. If agreed to, the framework would ease, because the Wall Street Journal probably got this leak from insiders in the Trump administration, and we don't have China's POV on this yet. But I anticipate China will roll on that. They'll gladly say, oh yeah, we'll work on those precursors. So that's going to be a win for China. And the US is going to try to leverage them to drop their 20% retaliatory tariffs. Or their retaliatory tariffs. Here we go. If agreed, the framework would ease tensions. Earlier this month, China tightened controls on rare earths. In turn, Trump threatened another 100% tariff on China, which they've already tacoed on. Now, under the new framework, the U.S. expects China to delay new rare earth rules. I believe that they're going to delay that for a year. Dude, a taco a year! The expected deferral on China's latest rare earth controls. Well, keep in mind, China's smart about this. If China delays the rare earth sort of threat, yes, it buys the United States more time to produce their own rare earths, but it also takes pressure off of us to produce our own rare earths. Remember, in the Meet Kevin Alpha report, Schumer Siesta coupon code expires tomorrow.
Coupon linked below.
We called that MP material would run to 100 and reject 100. Is exactly what happened. And the trend has been down since then. Now we're hanging out right now at the 65, 78 line, roughly. It's just a basic fib retracement line over here. But there's a likelihood that if China does go for a year extension, it puts the pressure off of like rushing investments into MP. You probably, unfortunately, continue to see a bleed down on MP for the time being because it takes the pressure off. It's kicking the can down the road. It's like, it's not just 90 days anymore. It's literally a 12-month deferral. Chinese negotiators are expecting the U.S. to freeze potentially new policy actions deemed harmful to China. Right, so basically everything that we threatened against China, we'll just remove. So like what progress has been made? Who knows? But it's taco. I mean, that's what the stock market reacts to. It's been taco since April. That's why the stock market's been straight up since April. It's unclear how the framework would affect a different set of rare earth restrictions that Beijing announced in April. The established licensing system suggests that authorities could ramp up rare earth restrictions again. Of course, that just gives them leverage. And that's what the Chinese are doing. They're building that leverage so they can, that's why they're doing this licensing thing with companies and why they're trying to restrict US companies so that they can not only monitor where exports and imports are going and coming from, but so that they could quickly restrict them should they ever need to. This is China preparing for more, announcements from Trump. Okay, I mean, this is bullish earlier than we thought. Now, this is leaked information from the Journal, but it basically indicates that for very, very little from China, Donald Trump is essentially willing to roll. Now, it's good news, okay? But it kind of means that the Trump administration doesn't actually think they have much of a hand here because they're screwed on rare earths and they're screwed on soybeans, which hurt American farmers, which are like mostly Trump voters, right? So like Trump basically just has to roll back all of his nonsense to hopefully get China to roll back their retaliation. Who cares what that means? Like politically, this isn't meant to be like a jab at Trump or whatever. It's bullish. Remember, the caddies that we had this week were Powell tomorrow, Trump China on Thursday. If Trump is this willing to roll already in basically pre-announced negotiations to the Chinese, because that's what they're doing here. They leak it to the Wall Street Journal on purpose. So China can sit there and go, oh, look, the Wall Street Journal has update. I don't know why that sounds like German. But anyway, they go read the Wall Street Journal and they're like, all right, we've now pre-negotiated basically. Now there's very little left to do. Trump's basically walked on everything. So they go into the meeting and go, yeah, sure, we'll try harder on fentanyl. All right, we'll take down some of the tariffs. And so basically, we win the reduction of these tariffs, The stock market loves that. I mean, you might actually see some benefit to some of the furniture importers as well. Maybe less so because, you know, you've got like Taiwan and you know, some of the other countries that Restoration Hardware, for example, will use versus China. But yeah, I mean, look at that. You can clearly see Restoration Hardware. It's up from the 170s where it was about a week ago. And you can see that rotation here just on the Chinese trade deal, now up 4.9%. And is the classic beneficiary here of lower tariffs and a reduction of tariffs in the whole region. So this is good news way earlier than we expected. It's very bullish. And honestly, if you pair this with what you got with the ADP weekly numbers, we're not on a bad trend here. So if you download the Meet Kevin app, you'll see what I wrote about the ADP numbers this morning. But the ADP just started releasing weekly data, which is a game changer, right? Because we don't have like public data, BLS data. So now the ADP rugged the Fed and said, we're not going to secretly give you weekly data anymore. And then, you know, a week later, they come out and they're like, JK, we're just going to give it to everybody. So ADP releases this report, and they basically tell us that jobs for the 4 weeks ending October 11th were 14,250, which is great because if you look at the September read, we had negative 32 on the ADP, but you have to kind of adjust, like add their adjustment back in. And if you add the adjustment back in that they made, which was 43,000 as an adjustment, if you add that back in, you were at actually 11,000 jobs for all of September. That 4-week average, so basically adding in the average of the first 11 days of October, moved us up to 14,000, which means jobs are not falling off a cliff. So if jobs are not falling off a cliff, and we're getting taco, and we're getting 25 BP of cuts, it's kind of bullish if you think about it. Like, none of that's bearish. Now, again, I still maintain the bearish part could be the government reopening because then you'll actually get like a dual labor report. But think about this. Fed 25 BP, right? 25, what the hell? 25 BP, there we go. Fed 25 BP. Fed stop QT. Okay, what is that? That's bullish. What's 25? That's bullish. That's priced in at like a 97% chance. What else is bullish? The Schumer siesta, ironically, continuing, is actually bullish. Why is it bullish? Because we don't get data. The Schumer siesta continuing is great. Now, in fairness, the Schumer siesta coupon code expires tomorrow, which, you know, it's probably a bullish thing because you can get in before the price goes up. You got time. But anyway, the Schumer siesta continuing is actually bullish. 25 BP is bullish. The China trade deal, China taco, is bullish, right? So what else is there? Now the bad news, the only bad, 27 weeks unemployed, still rising, and then of course, you know, layoff announcements, which, you know, Amazon got so much flack for. That's why they're now like branding it down as, well, I mean, it could be as low as 14,000. You know, we don't want to make it seem like it's worse than 2022, even though it probably will be because they're laying off up to 30,000 workers. But broadly, I mean, who cares? Layoff announcements are going to take quite a while to actually trickle through the economy. This will be slow burn. So there's nothing like falling off a cliff here. Now, sometimes what you'll actually find is treasury yields can sometimes go down when you get less of these tariff threats. Yeah, a little bit. 10-year treasury down 1.2 bips. Why? Not uncommon because we see tariffs as inflationary, right? So, and that keeps bond yields up. So it you know, increases your opportunity cost for bonds because inflation is higher. So broadly, this de-escalation is good. You're seeing that de-escalation in gold as well, back under, what are we at now, 39.69, so back under 4K. So broadly, this is a treat. This is a treat we just got well before expected. Look at this, up another 1 and a bit here on Restoration Hardware. The Qs were really doing nothing until this you know, started coming out over here. We were trading mostly sideways. If anything, we were trading down for most of the day. And this is normal because we were like preparing for, oh, what's going to happen with the China deal on Thursday? Well, here we go. We're getting full taco. Full taco. So it's great. Somebody writes here, net bullish, short, medium term. Totally agree. I don't mind the joke with taco, but how is it taco when the tariff remained and is only going down because China's negotiating and never went down until China came to the table? Confused. I don't even know what you're saying. I think what you're trying to say is it's going down because Trump and China are agreeing to talk. But like, let's be clear here. What we just read in the Wall Street Journal is very clear. All right, we'll start cutting tariffs down if you just promise to enforce crime a little bit more. It's an easy hit. It's an easy give up. That's my point. It shows the sincerity of being like really brutal to China isn't really that desirable. This isn't actually really about protecting American manufacturing, right? It's a game. That's such an easy give up. Let's see here. Nvidia, somebody writes Nvidia cruising. Yeah, well, they've got the event going on, which is exciting. The quantum chip as well. Nvidia now all-time highs. Apple across the $4 trillion market, which is pretty awesome. What else are y'all saying here? China loss. Yeah, I mean, let's see here. Somebody else says he needs them to buy soybeans. Right. So we'll see. We'll see. He says he's not tacoing out. It's a negotiating tactic. Well, I mean, yeah, but that's tacoing, right? Because the whole premise of taco is from a stock market point of view. I think people think that taco is supposed to be like offensive to Donald Trump. Remember, I said that. This has nothing to do with trying to suck the wiener of Trump. Like, I don't give a flying F about your politics. I care about the stock market. And from a stock market point of view, all taco says is these tariffs aren't going to last. Over time, they will go away. Whether they go away because Trump walks them back, seems to be very easy to do, or they go away because a new administration comes in and gets rid of them. They will go away eventually, and then we'll be facing, beautiful disinflation, hopefully deflation, and prices will actually come down. Although you have to be careful, because if you wish for too much deflation, you often you walk into an economic recession or depression. So it's kind of like a double-edged sword, asking for prices to come down, right? So it's something to pay attention to right there. How else is the market moving now? So this should mean that TLT is up like 20 bips. The fact that it's actually green today on the eve of the Fed is great. You've got Axon up. Somebody here in the chat's mentioning figs, or not fig, talking about Figure. Figure Technologies up 6% today. Yeah, nice. This was one of the buys that I did a few weeks ago in the lower 30s. I think it was in the lower 30s, maybe mid 30s. But anyway, 40, 44, 45 bucks almost here. I think that's almost all-time highs. It's kind of cool. But anyway, so make sure to join the Meet Kevin Alpha Report, linked below, and get all the courses on building your wealth, as well as the Alpha Report every day the market is open. Could even be a tax write-off for you. Get a little end-of-the-year tax write-off in there.
Coupon linked below.
Kevin is very talented, but I don't know if it's going to be him, but he's a very talented guy.
Kevin's somebody we'd consider. Kevin is fantastic, too.
I think that Kevin's a brilliant guy, and I think that we'd all be very lucky to have him.
Kevin is much more interested than most people, by the way, in the balance sheet.
Bitcoin's gold. So its use case is really for smaller transactions, faster transactions, and really is a use case in emerging markets.
What about Hedera?
Yeah, Hedera is really not even a blockchain. It's something that's a little bit unique. It's more of a mesh network of nodes that holds information, and it allows enterprise solutions to be able to actually grab data very quickly, which is why it's the leading technology utilized by enterprise.
So there are now more than 100 crypto-focused ETFs trading in the U.S., so it's a pretty competitive landscape, Stephen. And we've seen ETF analysts warn about oversaturation in this space. What is your strategy for standing out? Being first to market certainly is something to hang your hat on, but beyond that, once BlackRock comes out with its version of Litecoin or Hedera, how do you stand out?
Yeah, look, I think obviously coming to market is very important, but we're also what a lot of people would consider crypto native. Most of our team has only ever done crypto. The other half of our team, we all work together at Guggenheim, launching its first ETFs.
Really boring.
The best. That's not me talking.
That's the scoreboard. Just the fastest, most reliable network. Ain't that right, Graham? When you compare, there's no comparison.
There we go. Oops, too far.
I had a total of 22 life-saving surgeries over 2 years that I spent in the hospital. We were worried. We didn't know how we were going to be able to pay for the house.
And I'm going to try to get you as much bang for your buck as possible.
That's great.
This one here covers all your prescriptions, your doctors as well.
Oh, wonderful.
I have a hard time with this.
Everybody's on commercial
That's
here.
what I'm here for. Based on our
Come on.
conversation today, I would highly recommend this plan.
You're so helpful.
Let's go try the NVIDIA event. Okay. Let's go watch Jensen.
The more people, the smarter.
Oops.
Two exponentials now putting pressure on the world's computational resource. At exactly the time when I told you earlier that Moore's Law has largely ended. And so the question is, what do we do? If we have these two exponential demands growing, and if we don't find a way to drive the cost down, then this positive feedback system, this circular feedback system, essentially called the virtuous cycle, essential for almost any industry, essential for any platform industry. It was essential for NVIDIA. We have now reached the virtuous cycle of CUDA. The more applications, the more applications people create, the more valuable CUDA is. The more valuable CUDA is,
Sure.
the more CUDA
Mo.
computers are purchased. The more CUDA computers are purchased, more developers want to create applications for it. That virtuous cycle for NVIDIA has now been achieved after 30 years. We have achieved that also. 15 years later, we've achieved that for AI. AI has now reached the virtuous cycle. And so the more you use it, because the AI is smart and we pay for it, the more profit is generated, the more compute's put on the grid, the more compute is put into AI factories, the more compute, the AI becomes smarter, the smarter, more people use it, more applications use it, the more problems we can solve. This virtuous cycle is now spinning. What we need to do is drive the cost down tremendously so that, one, the user experience is better. When you prompt the AI, it responds to you much faster. And two, so that we keep this virtuous cycle going by driving its cost down so that it could get smarter, so that more people will use it, so that so on and so forth. That virtuous cycle is now spinning. But how do we do that when Moore's Law has really reached this limit? Well, the answer is called co-design. You can't just design chips and hope that things on top of it is going to go faster. The best you could do in designing chips is add, 50% more transistors every couple of years. And if you added more transistors, we can add more transistors, and TSMC's got a lot of transistor, incredible company. We'll just keep adding more transistors. However, that's all in percentages, not exponentials. We need to compound exponentials to keep this virtual cycle going. We call it extreme co-design. NVIDIA is the only company in the world today that literally starts from a blank sheet of paper and can think about new fundamental architecture, computer architecture, new chips, new systems, new software, new model architecture, and new applications all at the same time. So many of the people in this room are here because you're different parts of that layer, different parts of that stack and working with NVIDIA. We fundamentally re-architect everything from the ground up. And then, because AI is such a large problem, we scale it up. We created a whole computer, a computer for the first time that has scaled up into an entire rack. That's one computer, one GPU. And then we scale it out by inventing a new AI Ethernet technology we call Spectrum-X Ethernet. Everybody will say Ethernet's Ethernet. Ethernet's hardly Ethernet. Ethernet, Spectrum-X Ethernet, is designed for AI performance, and it's the reason why it's so successful. And even that's not big enough. We'll fill this entire room of AI supercomputers and GPUs. That's still not big enough because the number of applications and the number of users for AI is continuing to grow exponentially. and we connect multiple of these data centers together, and we call that scale across. Spectrum XGS, gigascale, Spectrum X gigascale, XGS. By doing so, we do co-design at such an enormous level, such an extreme level, that the performance benefits are shocking. Not 50% better each generation, not 25% better each generation, but much, much more. This is the most extreme co-designed computer we've ever made, and quite frankly, made in modern times. Since the IBM System 360, I don't think a computer has been ground up, reinvented like this ever.
This is, I have to say, I honestly, I think he's like one of the best salespeople for this. Like, he's just so good at this.
Done. We've created, otherwise, hey, Janine, you can come out. You have to meet me like halfway.
Let me go back to it in a sec here.
All right, so this is kind of like Captain America's shield. So NVLink 72, if we were to create one giant chip, one giant GPU, this is what it would look like. This is the level of wafer scale processing we would have to do. It's incredible. All of these chips are now put into one giant rack. Did I do that or did somebody else do that? Into that one giant rack. You know, sometimes I don't feel like I'm up here by myself. This one giant rack makes all of these chips work together as one. It's actually completely incredible. And I'll show you the benefits of that. The way it looks is this. So, thanks, Janine. I like this. Yeah. All right, ladies and gentlemen, Janine Paul. I got it. In the future, next I'm just going to go like Thor. It's like when you're at home.
Missiles for Japan's F-35 fighter jets will arrive next week ahead of schedule. Japan now upping its defense spending and signing an agreement with the U.S. to increase mining and processing of rare earth minerals, even though China tacitly agreed to halt its aggressive export controls for a year to stave off 100% tariffs set for November 1st. China hawks say Trump would be right, though, to demand more.
The truce, if it is for a year, will end just before the U.S. midterms. But we got to remember that we are giving the Chinese a concrete benefit. We're not imposing the 100% additional tariff. And we're doing that for vague Chinese promises of buying more of our stuff or selling stuff.
Trump also wants China to stop buying Russian oil and resume buying American soybeans, also address fentanyl and sign a TikTok agreement. Still, China has not officially confirmed the meeting is happening, even though we've heard nothing but confirmations from the U.S. side. Sandra? John?
Okay, Jackie Heinrich live there in Tokyo for us. Thank you very much, Jackie. John?
And I'm sure the Prime Minister appreciated watching Otani last night. Food stamps set to expire this Saturday, the latest program to face funding hurdles during the government shutdown. More than 40 million Americans, roughly 1 in 8 people, could lose their benefits at the end of the month. Let's bring in the Secretary of Agriculture, Brooke Rollins, for more on this. Madam Secretary, thank you for being with us. Appreciate your time. So when you said you were in Pebble Beach, I thought you were in California. You're there in the Pebble Beach in front of the White House. Here's what the USDA said about the looming deadline here. Senate Democrats have now voted 12 times to not fund the food stamp program, also known as the Supplemental Nutrition Assistance Program, SNAP. Bottom line, the well has run dry. At this time, there will be no benefits issued November 1. We are approaching an inflection point for Senate Democrats. They can continue to hold out for health care for illegal aliens and gender mutilation procedures, or reopen the government so mothers, babies, and the most vulnerable among us can receive critical nutrition assistance. All that said, though, comes to a point, Madam Secretary, when people really start to hurt, that their attitude doesn't become one of blaming one side or the other. It's more a pox on both of your houses.
You know, hunger doesn't have a political party, right? Poverty doesn't distinguish between Republican or Democrat.
Meeting between President Trump and the new Japanese Prime Minister. One is that President Trump confirmed that Japan is going to boost its imports of U.S. military supplies. The second is that the countries entered into an agreement on critical minerals. It appears to be some sort of cooperation pact, though we're still waiting some additional details there. And then also they signed a memorandum of understanding when it comes to shipbuilding, another industry that we know China really has a grip on. So that was sort of the underlying theme here, trying to bolster up against China. We even saw this in some of those investments that came out of today as President Trump hosted a reception with business leaders at the U.S. ambassador to Japan's residence here in Tokyo. The common theme among all the attendees there tonight, from Apple's Tim Cook to Anduril's Palmer Luckey, was that they all represent those industries that the U.S. has deemed absolutely critical when it comes to competition with China. Now, I do want to point out that Japan is actually already the top investor, foreign investor in the United States. Government data shows us that Japan invested more than $750 billion in the U.S. last year alone. Now, we know that they're trying to make good on this pledge for this $550 billion investment fund. That is, of course, as you well know, part of the deal with the U.S. to receive that more preferential tariff rate of 15%.
Tyler, I'm curious what happens next on this trip, if there's any likelihood that you're going to be stopping in Pyongyang on the way to Seoul or on the way beyond it. The president had teased that he was looking perhaps to meet with the North Korean leader. What do we know of what's likely to unfold here on the last leg of this trip?
Well, it doesn't seem like the latter is going to happen, but you're right. President Trump did allude to it, but then ended up telling reporters that he didn't think he would have time, but he does welcome a meeting with the North Korean leader when the time is right. We are looking ahead, though, to two other critically important meetings. One, of course, is with South Korea's president, as that country is still trying to ink the finalized version of their trade deal, which would also see a mirrored 15% tariff rate. Much like Japan, it would also extend to autos, which we know is really critical for that country. President Trump also teasing earlier that he's set to meet with the NVIDIA CEO Jensen Huang on the sidelines of the APEC CEO summit. That's also happening tomorrow in South Korea. But then we are really just beating the drum ahead to Thursday, when we are going to have this highly anticipated sit-down between President Trump and Chinese President Xi Jinping.
I think it's safe to say Jensen Huang will walk off that stage at the convention center here in Washington, make his way to a plane to get to that meeting in time. Tyler Kendall, thank you very much for the reporting. We look forward to more of it as the president's trip continues. I want to stick with defense spending, if we could, here. And as Tyler was mentioning, that's been really the substance of a lot of the conversations the president has been having on this trip to Asia. It's a theme he returns to time and time again when he meets with foreign leaders. It's something that he thinks is incredibly important, that foreign nations spend more on their own defense. It is part of my next guest's job to convey that to NATO allies in particular. My next guest, Matthew Whitaker, the U.S. ambassador to NATO, who joins us now from Brussels, where, of course, the alliance is headquartered.
Brussels!
Ambassador.
You know what you got to try in Brussels? Mussels. Great. Really good. I don't know why, but the mussels in Brussels. Classic. All right, so we got to do pretty important update here. You know, I don't want to leave anyone hanging on this, so we're going to have to do this here. All right, let's go. Let's see here. Hold on. Let's go right in here. Let's go ahead and change this to 9.3 on the taco scale. And we're at the 28th here. It's pretty taco-y. And then let's go ahead and let's see if I can get that beautiful taco scale to adjust its look a little bit. You know, maybe we can even get that. I don't remember how to do it. The tricky thing is, how do I get the scale to change? The scale. Here we go. Okay, so we're gonna hide. I gotta move the arrow. Okay, hide and show. That one. Oh yeah. Ooh yeah, that's nice. Okay, look at that. Look at that, isn't that hot? I moved the arrow. I did it. That's basically full taco right now. Oh, that's nice. That's really nice. I like it. All right, cool. So that's at You could track that at meetkevin.com/data. Yeah, it's already updated too. And then you could sign up for the Daily Wealth right here, which is nice. Also, the links to the Meet Kevin app are here. You can sign up to the Daily Wealth, which is right here. Taco Scale, Bear Bull Scale. Yeah, it's really good. All right, so now let's see. How are we doing over here? We got, good news, obviously. Here, Restoration Hardware's moved very nicely on the move. Figures moved very nicely as well, 6%. That's nice. Chegg. Dude, Chegg got smoked. I was looking at their earnings yesterday. Crazy. Okay, let's see what else.
In supporting Ukraine and the defense, ultimately, of the European continent. And it's, we're watching very closely. Secretary Hegseth was very clear about that President Trump is interested in the success of this since he announced it over the summer when I was there with him in the White House. And so it's a good news story, but, our work is never done because this war continues. And that's, I think, the most important thing that President Trump has impressed on all of us, including our allies, is this war needs to end, and Russia needs to come to the table and resolve this dispute, resolve this war. They've made no progress in the last 3+ years of fighting. They still only control about 20% of Ukraine, and they're not, going to accomplish much more, even if they continue to fight for years. And so the time is now to end this war.
It was a couple of days ago that the Treasury Department announced these new sanctions on Russian oil producers, and we've heard the president say publicly he hopes those sanctions won't be in place.
All right, this is boring. Let's see what we got over here.
In their minds. People have been out.
Oh, too much going on. Mute Jensen.
Furious at this, like so mad.
We played a little while ago. God, people are friggin' being annoying in my chat right now.
Why?
They were being so annoying mine earlier too. They just be going on.
What are they saying, Vanilla?
That
he says this is the cultural shift I've been waiting for. Is he gonna actually say anything?
What always demonize them and hate them, right? And make some bad around me, Basically, what happened is that Cutie Cinderella said that she would hang out with people that were in phase.
Okay. This is the problem with, I want to be able to watch this stuff, but so much of it is just weird. I don't understand. Doesn't make sense.
Kathy Wood just went.
Okay, what is this? No, that's boring. Okay, we saw that. We saw that. Okay, what else? Then we've got... Let's go take a peek at CNBC and Fox. Cultural shift in the streamer world? Yeah, I don't understand a lot of that stuff, so I kind of, sometimes I'll click on it and I'm like, is there anything here? And then there's nothing really there. At least that I understand. I don't know, maybe I'm broken. Okay, so then let's go to... Let's see what they've got here. Amazon targets middle managers, memo suggests. We saw that. Circle CEO. Okay. NVIDIA, Snap, Snapchat. Meta glasses are what we built 10 years ago.
Why are you playing here? And why are you competing here? Meta obviously is a market leader here with the Ray-Bans, and there's rumors that Apple's going to come after that. So why Snap?
Well, 11 years ago, we invented all sorts of things that really changed the way that people use their phones, and we think made technology a lot more human. Whether that was opening to the camera instead of a feed, whether it was ephemeral messaging to make conversations feel much more like real life, whether it was stories that put content in chronological order, and of course, augmented reality. I think we have now the largest augmented reality platform.
Just a headline here. NVIDIA says they have 500 billion in bookings for Blackwell and Rubin chips over the next 5 quarters. Holy smokes, dude. Wait a second. 500 billion in NVIDIA, Blackwell, and Rubin chips over the next 5 quarters. So, wow, NVIDIA. Okay, hold on a sec. Let's go look at their investor relations, though. Investor relations, NVIDIA. So if I go look at their actual financials, financial info, if I go grab their last 10Q, and then I download the puppy, NVIDIA Q2 earnings report, 10Q. That's actually kind of huge. Okay. Pop this puppy into here. Let's see what that looks like. Oh no, I opened it in Adobe. No, not Adobe. All right, there we go. Okay, so revenue, Adobe NVIDIA's 3-month revenue, NVIDIA single quarter revenue is 46.7 billion as of Q2, right? Okay. Blackwell and Rubin chip orders, just those two, at 500 billion in next 5 quarters, is on average 100 billion per quarter. Holy crap! Now I don't think they can fulfill that. I don't imagine they can fulfill that many orders, but the backlog, but the pace is essentially 100 divided by 46.7, 2.1x Q2 2025's pace. So even if they can only fulfill half, right? Even if they can only fulfill 250 billion, that's 50 bill a quarter. Oh, that stupid Adobe bouncing up over there in the corner. It's so annoying. Hate it when the apps do that. All right, so even if they can only fill 250, that's 50 billion a quarter. But why would they only be able to fulfill that? I mean, I guess, like, the point is there's plenty of room to grow into it. 50, because 50 would be a quarterly growth, like in the next quarter. I mean, what is the current estimate? Because they would have forecast in their last sheet. They probably gave us a press release. Let's see here. So, NVIDIA's Blackwell grows 17%. Okay, where's the forecast? We want the forecast. Blackwell Ultra ramping at full speed. It makes sense. Gross margin gap. 54 billion. This is why. Okay, so they're already forecasting 54. Okay. So I don't think there's a concern that they're only going to do half. Already forecasting 54 billion for Q3. Next 5 quarters starting Q4, implies an upside divided by 54, an 85% upside in quarterly revenue from Q3 if TSMC can keep up. Insane. The creative financing don't hurt. The creative financing deals don't hurt at all, right? Like what we saw with Meta, that creative financing, that was insane. It was crazy. And their margins are just so good. That's the thing to keep in mind as well. Like, look at their gross profit. 338 divided by 46.74. We're at 72% gross profit margin, man. Gross profit margin, which means, the net income is insane here because they just designed the chips. I mean, we have a 56.4% net income. I wouldn't actually be surprised if EPS expectations have gone up now for NVIDIA. I'm going to go check. So my last NVIDIA expectation I'll show you. Edit. NVIDIA. This is just the back end of what we do in the Meet Kevin stocks tab for course members. So if you have the Meet Kevin membership, the back end, you know, we continuously update growth rates and earnings per share forecasts, and they basically help us calculate automatically for course members PEG ratios and fair value estimates. Yeah, it's still at 4.51. That's crazy. 43.51 plus 16.73 plus 4.67 plus 16.73 divided by 4. Current Wall Street estimate is 20.3. Yeah, Wall Street's estimates actually moved up on EPS growth targets. I mean, I don't know if that matters so much, but I'll slap that in, that 0.3. That's wild. So, you know, I'm going to make a note of that. That's kind of huge. So, NVIDIA... Okay, there's another headline here. We've got... Okay, now there's... I mentioned that... So is it 5 quarters or 6 quarters? Because I'm getting 2 different headlines now. Let me see if there's... It'd be nice to fact check exactly what it was. NVIDIA... Company news. So, okay, I'm seeing both 5, 6 quarters. Okay. It looks like it was revised by Reuters to correct it to 6. Thanks, bros. That's fine. Reuters corrects to 6 quarters. Still insane. Okay, so let's do the math then on that. Okay, so 500 billion over the next 6 quarters. Obviously, that now changes the math a smidge. It's still insane. Divided by 6 brings us to 83. Okay, see, but we could grow into that more easily. Already forecasting 53. That implies on 53, 83 divided by 53 still implies a 56% upside in quarterly revenue. The current estimates for 2025 EPS, because this is going to help us understand. I'll compare AMD's in just a moment. Current EPS, current Wall Street EPS forecasts. Wall Street currently forecasts 20.3% growth for NVIDIA over next 4 years average. That's 43.51% next year. Current announcement suggests 13% gap between Wall Street estimate on EPS and potential based on revenue growth here, assuming margins maintain, right? So it kind of suggests Wall Street isn't bullish enough on NVIDIA. So what's the current peg? So if I go... So if I slap in the current peg, we're at 2.13, and then on AMD, let me throw AMD in. AMD. Yeah, so just a quick look. I've got AMD at 246. I've got NVIDIA at 2.13. So NVIDIA still has a better valuation there. That's pretty impressive. Okay, I'm going to slap that in there. Now, let's see. What about, let me see if there's more that's coming out of NVIDIA. NVIDIA unveils new Bluefield 4 processors, Rubin-based systems, blueprints for data centers, 20 million Blackwell Rubins to be shipped. Wow. 20 million chips, man. Do we know if Meta is going to use AMD or NVIDIA? That would be clutch if somebody had insight on that. Okay, so we got that. Next 6 quarters, we got the 83 billion on quarter. We talked about the issue with fulfilling, but it's less than 2.1% pace. That would be 43. You know, it's still about 2x pace, but it's essentially a 2x pace. Q2 2025. Already forecasting 54 bill, and they usually forecast down, right? You can just see what I'm doing here. Next 5 quarters, separate facts, if TSMC can keep up. The financing deals don't hurt. And then there's the estimate here for NVIDIA. Okay, so that's quite useful. The processor that NVIDIA is now unveiling, what is this? NVIDIA unveiling Bluefield 4 processor. Okay, we also hear that Blackwell is now in full production, which is fine. That's what we would anticipate, because initially they had some production issues. Blackwell in full production in Arizona. Oh, that's great. 20 million Rubins to be shipped. 20 million Rubin chips to be shipped. Well, that's such a mouthful. Okay. So Meta is diversifying into both Meta, NVIDIA, or AMD chips. Let's see what I can find out. I mean, here's just a really quick Reddit piece. I wonder if they have a citation for this. But Meta to build 2 gigawatt data center with over 1.3 million NVIDIA GPUs. Invest 65 billion. That's old though. So we know Meta uses NVIDIA to some extent. I wouldn't be surprised if they do both, you know, because, like, who cares? Just get the stuff operating. Meta is currently the biggest customer of AMD accelerator, says someone here. Meta's also designing their own. Well, yeah, they just want them all. Meta wants to build its own accelerator chips. This will be a long process. Everybody wants to make their own chips. There's so much margin in them. Custom semis, reduce costs. NVIDIA is not getting disrupted overnight. Blah, 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 blah. All right, whatever. The Meta financing deal is probably bullish, just frankly, both of them. But the Meta financing deal is just insane, right? So let's throw that on the Meet Kevin app too. Okay. Meta financing deal. Okay, so what we have with the Meta financing deal is this insanity of... It's actually going to be easier to read it from the bottom up. Meta's $30 billion new data center won't be owned by Meta. Meta will lease 11 individual buildings in 4-year leases, so they don't have to show the leases as long-term liabilities. This is a loophole, basically. And then on top of that, they're going to they'll have a residual value clause in case they walk. You know, expect big net present value discounts. Expect big NPV discounts. No idea what the discount rate is, but I'm sure it favors Meta. It's in my opinion just a big win for Meta. Big win for Meta. Okay, let's link that. Okay, we have bonds are, oh yeah, that's right. The bonds are due 2049, which is insane. That's 24 years for AI chips. Likely, I'll say likely a lot of NVIDIA chips and assuming some AMD in there as well. PIMCO bought 18 billion. BlackRock bought billions. These are being called the Hyperion Bonds A+. At issue, at par, 6.6% premium, or 6.6% yield. Likely lower effective due to premium. You know, they were sold at a premium. Up to 5 gigawatt center. Wow, that's wild. As long as capital markets are willing to do this, why not? XAI is doing something similar. Okay, let me see here. Oh, you know what I should do? Is just do like an AI category. Yeah, that'll be nice. Let's start doing that. We'll do category. Let's do, oh, we'll just call it AI. AI. There we go. Okay. Then we've got XAI has similar deals on Colossus 2. Right. Clean up the balance sheet, basically. So the balance sheets are crap. Meta has 72 billion of CapEx planned in 2025. 100 billion in 2026. Wow. Just massive. Meta effectively won't take on any of this as debt. No debt from this. Just seems wild. 27.3 billion. $27.3 billion deal for the new data center. Okay. Wow. All right. So then, how are things moving now? Wayfair is still up on 23. Nice. Pin's getting no benefit from this. Let's see what some of y'all are saying here. CrowdStrike shares up 4.5% on NVIDIA partnership. Okay. Who gets to depreciate the data centers? Yeah, that's a good question. Yeah. It's technically that Blue Owl Group owns it. I don't know. That's a good question. 43% of GPU's orders are for Llama inference. The MI300, those are the AMD chips. Where'd you see that? It would make sense that they're buying both. Okay. Yeah, Nvidia's like really nicely up on this. Look at that. Oh, it's at this rejection line. Wow. Okay. Let's go with see if there's any other news on this. Financial Times, no. Amazon to cut jobs. What? Okay. Look at this. $150 million banker fee to sell First Brand. The circus of the Chapter 11 bankruptcies. The fee... The bankruptcy of First Brands has been gripping Wall Street. Sudden freefall bankruptcies with complex capital structures and allegations of fraud don't come along very often. Intriguing subplot for distressed debt nerds. Last week, major advisors, law firms, filed retention applications with the Federal Bankruptcy Court, providing some preliminary details on how much the firms were going to charge the bankruptcy estate. The line above comes from the Lazard application, which is the most complex. That's because investment banks don't bill by the hour, but rather demand lump sum transaction fees. Lazard lists 7 different types of transactions that I can get paid for. First Brands has already said publicly it will initially attempt to sell itself. Lazard is incentivized to get the highest possible price in the auction scenario. Lazard will be paid a sale transaction fee equal to the greater sum of 0.75, so 75 bips of the aggregate sale, including up to $11 billion, plus 2.25% of the aggregate portion of consideration in excess of $11 billion. Wow. Dude, there's huge money in this. Holy smokes. $11 billion deal is almost enough to cover the pre-existing debt. That would be worth $82 million. Wow. Another 22 mil for every billion they can get. Wow. However, as we mentioned at the top, Lazard graciously agreed to take no more than $150 million. A fee they reach if they get to or a $14 billion transaction value. Wow, dude, there's so much money in that. That's crazy. Restructuring fee. Wow. That's wild, huh? Here are the hourly rates. $1,700 to $2,500 per hour for a partner or counsel. Wow. That's insane. Holy smokers. Okay. Well, if you want to get into legal work, I guess there's some money to be made, huh? All right, let's see what else there is. NVIDIA releases model to speed creation of automated factories. Ooh. Can they pump Symbotic, please? That would be sick. Oh, and keep in mind, the Blackwell revenue is just a portion, or like the server chip revenue. Because look, that 46 billion, only 41 was from data center. So 41.1 divided by 46.743, about 88%. So actually the growth upside is potentially even higher on NVIDIA there. That's impressive. That's wild. Okay. Anything else on NVIDIA here? Let me see what they're saying here.
Weeks after President Trump claimed the drug caused autism in children, a link that has not been proven. Right now, Kenvue shares, they're down by 4%. J&J down by 1.6%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. And back we go to Washington. Balance of Power continues right now. Once again, your host here is David Gura.
Charlie, thank you very much. David Gura in for Joe Matthew on this Tuesday, on the 28th day of this federal government shutdown. And all throughout, we've been talking to lawmakers. We've been going back and forth to their districts, states, coming back to Washington, bringing us news of how their constituents are thinking about this shutdown as it stretches onward and onward. Please now that Congressman Greg Murphy joins us. He represents the 3rd Congressional District in North Carolina, my home state, and I might invoke my anchors.
Ooh, sorry to hear that. Somebody in the chat here says, I was laid off today from Amazon, part of the 30K cut. What was your job?
District as well, but great to have you with us here in Washington. Let me start with that question of sort of what you're hearing as you go back home about how long this has dragged on and how there doesn't seem to be, at least at this moment, any clear off-ramp to this shutdown.
Yeah, no, I think the Democrats have sewn themselves into a corner. It's really true. I'm hearing, hey, stay firm, hold the line, because it's just an asinine, ridiculous amount of requests in something that shouldn't have any requests in it. This is a clean bill to continue funding a month ago on a Wednesday, just like we did on a Tuesday. And so people are understanding that, and I think they're sensing some of the desperation of the other side.
I was up on Capitol Hill last week, and I sat down with Hakeem Jeffries, the minority leader, and just feet away, the House Speaker was doing a news conference.
Quality assurance engineer software. Wow. Oh, sorry to hear that.
Just wondered, do you speak with one another? Are these conversations happening? Yeah. I was also struck by how quiet the place was. But is that happening? Are you talking to Democrats? Is there any kind of conversation happening at the member level?
The conversation, it reminds me of Seinfeld a little bit. That was a show about nothing. Yeah. This is the shutdown about nothing, because we literally just wanted to fund the government. Let's just be very clear, David. Let's just tell it what it is. This is because AOC scared Schumer and the progressive left scared Schumer because he did the exact same thing in funding the government in March. Period. Let's just distill it down to what it is. And so they've now put $1.5 trillion in demands, basically reversing everything that the 2024 election said to do, because they say they don't like it. And so I think the American people understand that. Look, you had the Federal Credit Union yesterday, federal employees say yesterday, look, 2/3 of us are saying enough of this. Vote for the clean CR. Let us get back to work. Let us get funded. So I think the cracks are starting to occur. We know that some moderate Senate Democrats who spoke on the condition of anonymity last week said, look, we'd vote to fund the government, but our guillotines would kill us. Our far left would kill us. So
you are a medical doctor by training. You're a urologist.
Well, NVIDIA absolutely skyrocketing on some breaking news, and a Palantir partnership announced between NVIDIA and Palantir as well. But honestly, it's the numbers that are leading NVIDIA to skyrocket, currently up 3%. In our course member live streams in the Alpha Report, we have a $240 price target on this. This is really exciting for NVIDIA, but I want to break down the numbers for you to show you why this is moving the way it is and what NVIDIA just said. Keep in mind, coupon code Schumer Siesta expires tomorrow night, but you already know about that over at meetkevin.com. So first of all, to really understand what's fueling all of this, you have to understand some of the creativity that's going around to keep money flowing into NVIDIA. To some extent, it's kind of scary and weird, but listen to this. The creative deal-making behind Meta's $30 billion data center financing. This is made up of $27.5 billion of debt, $2.5 billion of equity. But basically, Meta, Mark Zuckerberg, he's like, look, we're going to be spending $72 billion of planned CapEx in 2025. A lot of that money is going to go into NVIDIA chips. Probably somewhere around 60% just goes into NVIDIA chips. That's what we see at companies like Oracle as well. They put about 60% into NVIDIA and then 40% whatever, right? 60-40 is often what we've seen. Meta plans $100 billion CapEx spending in 2026, which if you combine that, 60% of 72 plus 60% of next year's CapEx is already $103 billion from Meta alone. Keep that number in mind because it becomes really important. I want you to see how much of a pie Meta probably is of NVIDIA. And Meta just finalized this funding deal, and now Jensen is bragging about new big numbers. So I think there's a direct correlation here between this Meta financing deal and what's going on with NVIDIA's announcement. But what I want you to understand is the following. This deal is being purposefully designed to not be owned by Meta. It's literally a bond deal that is due in 24 years. Now, to me, that's crazy because who would buy these bonds that are due in 2049, 24-year bonds? Well, who's buying it are companies like PIMCO, who bought $18 billion, BlackRock, and life insurance companies who want longer, buttered out yields, basically. So they get a 6.6-ish% yield. Some of them paid a premium, so maybe they got in the high fives or whatever. But they're getting a nice yield locked in for 24 years, and Meta gets no debt on their balance sheet. Now, how does that work? Creative financing. Yeah, that's literally what this whole piece is about. Bottom line, Meta doesn't want all of this debt on their balance sheet. So instead, what's going to happen is this Hyperion data center that Meta is going to lease is going to be owned by bondholders and these special purpose vehicles. Basically, a fancy creative structure so Meta can use the data center without showing the debt on their balance sheet. And because Meta is slicing up the leases into renewable 4-year terms on 11 buildings at the data center, Meta can actually walk away maybe not scot-free. They'll walk away at a discounted net present value of the remaining lease term. But Meta will be able to walk away from these data center bags if they need to. So think about what this means. It's actually crazy for this whole bubble that fuels, and it's really bullish for NVIDIA, that fuels NVIDIA. And I want to start with this debt because I want you to understand this, okay? Meta wants to spend big. Problem, people get worried about the balance sheet, basically how much debt the company has, okay? Well, in this case, Meta now gets a $27 billion data center, roughly $30 billion once you consider the investments, with zero debt showing on Meta's balance sheet, approved by the SEC and approved by credit rating agencies as not to affect Meta's credit rating because Meta's not responsible for the debt. Meta's only responsible for renewable 4-year leases, which won't even show up as long-term liabilities because of the way they structured this. So now all of a sudden what you have is this game where Meta basically gets a $27 billion data center and no debt, and they're leasing it at, a fraction of the expense for, whatever period of time they want it. Now, who ends up holding the bag? Not Meta. Brilliant for Meta. If all of these in 24 years, okay, in 24 years, what do you think those Blackwell chips are going to be worth? The Blackwell chips will be worth zero. NVIDIA will have made their bag. Meta will have made their bag. Guess who holds the real bag? Well, PIMCO and BlackRock and these life insurance companies, which who cares, right? But the point is, what it does is it opens the door to, guess what? More debt. And more debt and more of this creative financing at Meta or XAI. We already know XAI is basically out of freaking money. So XAI is also using these creative financing deals for their Colossus 2 facility. I'm not making this up. It's right here in the article. Elon Musk's XAI is using a similar arrangement to fund chips going into the Colossus 2 data center. They can't afford all these chips. There's not enough cash. So they have to come up with these creative long-term structures to coax life insurance companies to invest in these, to lock in these higher yields. But the people who are backing those bonds don't even realize they're signing up for a 24-year bond on a data center that's backed by chips that aren't going to be worth anything in 24 years. But who cares? Because guess who prints money today? NVIDIA. Because what did NVIDIA tell us today? And this is why NVIDIA is skyrocketing. NVIDIA told us that this $46 billion of revenue they make is nothing. 88% of this is data centers. So $41 billion is data centers. Well, guess what they just told us? For the next 6 quarters, they have $500 billion of orders for the next 6 quarters. What does that work out to? Divided by 6, that works out to $83 billion per quarter of data center revenue. Right now, they're only doing $41 billion. That is a double of data center revenue on a quarterly basis. Now, their forecast is that they'll probably be somewhere around $54 billion of total revenue. $54 billion total revenue at 88% means they're probably forecasting Q3 to be about $47 billion of data center revenue, okay? That is still almost a double. It's definitely a W. 83 divided by 47. That's a 76% upside to the quarterly revenue estimates for NVIDIA. And if their margins stay consistent in this 72% gross margin basis, a lot of that is just going to come down to their net income, which is about 56%. Insane. More than 50 cents of every dollar goes to their bottom line. Folks, I kid you not, after taxes. After taxes, they take 56 cents of every dollar to the bottom line on these Blackwell chips. This company has the biggest PP in the world. The biggest pricing power in the world at NVIDIA. It's absolutely insane. AMD doesn't hold a candle to this net income. AMD's net income is like half of NVIDIA's. That's why people are so excited that AMD can catch up. I'm not trying to bag on AMD. I'm just saying the numbers are what they are, and it's one of the reasons, NVIDIA is number one, is because their margins are insane relative to AMD's. But we don't have to talk AMD right now. AMD will benefit from all of these leasing situations as well. As NVIDIA grows, AMD will grow as well. It's just, 1/10 the size of NVIDIA, which also explains why it has less pricing power. Just CUDA has created such a moat for NVIDIA. As Jensen spoke about this morning at GTC, the more people develop on CUDA, the more strong the moat becomes. This is why AMD is trying to partner with companies like Oracle to create an open source model to sort of weaken that moat. Whatever. I like both companies. You can like both companies. I actually think the more AMD is above 232, the more NVIDIA approaches my price target. And it's insane. I mean, look at this. It's literally about to hit $200. This is pumping, in addition to Trump tacoing, this is pumping the Qs right now, this announcement, which is amazing. Okay. Oh, this is interesting. Stellantis to deliver at least 5,000 NVIDIA robotaxis for Uber. Wow. NVIDIA says Uber ties up to include 100,000 vehicles. Uber shares up 1.2% on NVIDIA partnership. Uber eyes fleet of 100,000 NVIDIA-based robotaxis beginning in 2027. That's not a surprise. I've always said the biggest competitor to Tesla is not another automotive company. It's NVIDIA. Nobody pays attention to NVIDIA's automotive division. Nobody. And when you actually look at their press release, let's go into the NVIDIA press release. You can actually get a little bit of color on this. So if you go to NVIDIA's press release and you go to automotive here, automotive revenue is only $586 million in the quarter. That's literally 1 out of $80 go to NVIDIA's automotive side. That's it. 1 out of $80 that NVIDIA makes, automotive. And so guess what happens when all of a sudden now Stellantis wants to manufacture NVIDIA robotaxis, Uber wants NVIDIA robotaxis. That's a direct competitor to Tesla. Now, obviously, Tesla has a data advantage for now. And that's probably a topic for a different video, but it's something to pay attention to. The point that I want to make, though, about NVIDIA is that right now Wall Street is estimating, and I put this in the stock tab for course members, but right now NVIDIA is estimated to grow EPS at 46. Let me double check this. It is expected to grow, that's 43.51% of EPS growth next year, with 20.3% EPS growth average over the next 4 years. But if we actually change just next year to, the 73% that we're probably going to get, you should be bumping this probably to about 25% average annual growth. So I'm going to do that. I'm going to change NVIDIA's numbers to 25%. And if we do that, it's going to change the PEG ratio substantially for NVIDIA from 2.14, where it sits right now, which is relatively low. And if we bump them to 25%, let's see how it changes. So if I go to 25% growth and I update this in the back end for course members, you get the benefit of watching this video. Okay, then I go to the back end for the NVIDIA stock tab. We're at a 1.75 PEG right now on NVIDIA. Okay, what does that make the fair value for NVIDIA? Well, let's do the math on it. So this is just a quick example, by the way, of the style of fundamental analysis we do in the course member live streams every day. Like we did Wayfair and UPS this morning. They have their own little stock tab on this as well. But we calculate fair values off of this, right? So moving KPEG to 25% growth average next 4 years from 20.3% Wall Street, okay? That moves the fair value estimate for NVIDIA to 2.67 as a service provider times, I just need to get the current earnings per share, but then we're going to multiply it by 25%. And then we're going to grab the NVIDIA EPS at 4.51 for the end of the year equals 2.67. Apple AI doesn't want to work. That's fine. Times 25 times 4.51. That's why I keep a $5 calculator on my desk. These numbers just actually move the fair value target up $60. These Jensen numbers literally move the fair value target for NVIDIA from 240 to 300. That's wild. That's a really nice move right there. So really impressive. I mean, very, very impressive numbers. And a lot of it, you have to say, is based on these insane financing deals that you're getting. That are just propping up the bubble. Like, let's be clear, like these chips will be worth zero in the long term. And that's why Meta is so brilliant. Like, why else is Meta doing this? Where Meta's like, hey, just in case, we want to be able to get out of these deals. And then who holds the bag? Some random Wall Street bag holders that ended up buying a AAA rated bag of crap that they were told was AAA rated and had a good yield. We are just now beginning the securitized bubble. This is insane. Anyway, if you want more of my perspectives, make sure to join me in the Meet Kevin report. Grab it every morning before the market opens up at meetkevin.com. You get lifetime access. You could write it off on your taxes. Use that coupon code Schumer Siesta and get yourself some big PP.
Big PP. Kevin is much more interested than most people, by the way, in the balance.